Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. In a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, HART's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site, where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure that different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. And I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase we now have a new mode of transport. And although all of that technology had existed before those two human beings rode it, it was the moment at which those two human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright brothers airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them in the eye and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's done super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $79 billion agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way to the supply chain fuel is now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we needed, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, you know, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn their gas. At least they're pumping up carbon and methane into the atmosphere honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know which is declining in value.
You don't have enough of it, right, to power the world.
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line, we'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah. So for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, a very happy New Year, everyone. Live from our Bloomberg Interactive Broker studio, streaming on YouTube. We are also on Quick Take. Carol Masser along with Tim Stenevec. Happy New Year, kiddo.
Happy New Year. January 3rd, 2023. I'm still writing 2022 on my check. I'm just kidding. I haven't written a check this year.
I was just going to say, I doubt it, Mr. Mobile and all things.
I'm still writing 2022 on my Venmos.
Having said that, we've seen this before. Stocks moving lower thanks largely to big tech. So what's old is new again in this new year. We're going to have more, though, on the importance of the first trading days of the year and what happens in January, maybe what it tells us about the rest of the trading year.
We got a lot of great stories on the Bloomberg today. Among them, everything, well, almost everything that Wall Street expects in 2023 There's a lot in here, Carol.
Paul Brennan was like, what is this, 256 pages of a story? I can't print this.
The answer is yes. It is 256 pages.
So much to go over. We're also going to talk about Sam Bankman-Fried is in court today, and then we've got another Tesla miss. The stock is down again.
Plus, what you need to know about the first black woman to head a regional Fed bank. We're talking Susan Collins. Got a great profile of her.
Yeah, it's really good, right, to think about what's first and foremost in her mind. And are you heading south yet?
Not yet.
Are you thinking about it?
After reading that column from Connor Sen a little earlier, it sounds pretty good.
Although I think you would head west rather than
I think so as
south.
well. That part of the country's growing too.
Yeah, absolutely. We've also got the 21 best places to travel in 2023. Lots to get to. Let's begin, though, with a check on that trading day. And Charlie,
thank you very much. We are lower across the board, Carol and Tim, with the Dow, the S&P, NASDAQ, all in the red. Do want to begin with a couple of headlines, though, from the Bloomberg Professional Service. Former Fed Chair Alan Greenspan says a recession is the most likely outcome. Also says he does not expect markets to be as volatile in 2023. Additionally, top U.S. bank watchdogs have issued a joint warning on crypto activities. Let's begin with Bitcoin. It is down 0.7% right now, 16,633 on Bitcoin. The Dow, the S&P, NASDAQ, all in the red right now, with the S&P down 28 points, drop there of just about 0.8%. We have got the Dow Jones Industrial Average down 171, down 0.5%. NASDAQ is down 109 now, a drop there of 1%. Stocks continue to decline as investors remain on edge about the outlook for growth stocks. Tesla down 13.7%. Apple down now by 4%. 10-year yield 3.78%, with the 2-year yielding 4.40%. Spot gold up $15 the ounce to $18.39, up 0.8%. And West Texas Intermediate crude oil down 3.4%, $77.52 a barrel on WTI. So a down day to start the new trading year. Katie Kaminsky is Chief Research Strategist at Alpha Simplex. She says there's no clear narrative to guide investors right now.
What we're seeing now is the market has really not decided what the next trends are going to be, with the exception of short bond signals still being relatively strong. So from that perspective, it seems like we need to navigate the difference between the longer term narrative, how do we get over the higher inflation numbers, versus things are looking better. We're past peak inflation. China is reopening. So it is really sort of very, very mixed right now.
Bottom line, though, down day for the Dow, the S&P, and NASDAQ. 10-year yield 3.78%. S&P down 30, a drop there of 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
A little bit of a down day for Republican Kevin McCarthy, failing to a majority backing in that first initial vote to be House Speaker, but it ain't over yet.
No, it's not. First time that's happened, Carol, in a century.
Unbelievable. All right, we're tracking that and following that vote out of the nation's capital. In the meantime, let's get to the Market Drivers Report. Let's set your Business Week agenda on this, first trading day here in the United States in 2023. Abigail Doolittle, markets reporter at Bloomberg News. She's here in our Bloomberg Interactive Broker studio. First day, 2022. It's in the history books.
Thankfully.
But I feel like this trade, I've seen it before.
Yeah, well, Carol, this is not such a great day. As you know by looking at your screen, we have the S&P 500 down 0.8%, the NASDAQ down more than 1%, the Dow down about 0.5%. So it's interesting. We have value once again outperforming, with that Dow down less, growth underperforming. It has everything to do with Apple and Tesla, both of these big tech stocks breaking support. But it's interesting because you have other tech stocks such as Meta, Amazon, Google, PayPal, all trading higher. I would say the biggest influence on the trading today is the dollar. You have the Bloomberg Dollar Index up 0.7%. You have the Dixie up 1%. This as the Euro, the Aussie, and the New Zealand Kiwi, they're all up 1%. So the dollar, down, helping the dollar go higher. So that's a real headwind, for lack of a better way to put it, for stocks.
Well, let's talk about the calendar. It's the first trading day of 2023. Abigail, a year ago today, we'd be sitting here talking about the final record high of that bull market.
Yes.
It's been a bear market.
Tim's been holding on to it. Bring it back, bring it back.
January 3rd, 2022, down 20% plus from that.
I love that Tim is so focused on what you're talking about, that Carol's sideline narrative.
I was just like a bus driving toward Abigail.
You're just going straight forward on it. Well, you know, it's really interesting because I remember the beginning of last year. I don't remember so much the all-time high, but I remember the first couple trading days, and they were very, very positive. And then all of a sudden, out of nowhere, stocks suddenly rolled over. The narrative going into last year was how growth was going to outperform, value was going to underperform, and that simply really has not happened, as you know. So in terms of some of the different ways that we look at the market relative to these shifts, we, of course, have the Santa Claus rally, and I was just pulling that up right now, and I suspect that
we did end with some gains, right? Last week?
Well, it's funny, yes. So we were up just a little bit. Santa was in town last Friday. Santa was wildly in town this morning. The S&P 500 up about 0.8%. Now it's down about 0.3%. So there's still another day. Then some of the other ways of looking at the market, the first 5 days, the January barometer, which is the month of January. Then you have whether or not both January and February close higher. And then importantly, from a technical standpoint, if your Q1 low is above the December low. Now, the bottom line with most of these is if the market is up in that time period, then the year tends to be positive.
In January or January and February?
Well, for Santa Claus rally, for the first 5 days, for the January barometer, and for up January and February. And if we were to put them all together, I actually have some stats here from S&P Global. If all three are triggered, get ready, if the Santa Claus rally, the first 5 days of January or higher, and the January barometer, which is the month of January, if all three are triggered, you're looking at an average rally of 17%. If all three are not triggered, then you're looking at a decline of about 4%. So I think that that's the one, if there's really some consistency amongst many of these indicators.
That's okay. So the indicators are the Santa Claus rally, which includes the first 2 trading days of this year. So that's over tomorrow.
And the last 5 trading days of last year.
Last 5 trading days of last year, which we know how those turned out already.
Yes, we do.
Then the January barometer. And what was the third?
The first 5 days of January.
So there's a little overlap between the Santa Claus rally and the first 5 days of January.
Yeah, I mean, I think that people, you know, let's think about it. Or we like to figure out ways to slice and dice things, and so these are some easy ways to do it. I mean, the Santa Claus rally, the randomness of the last 5 days and the first 2 days, like, I've thought about that. Like, is that, I don't know. It's hard to know how they even came up with that. I'll have to look into that history. But in terms of the first 5 days of the year, that sort of makes sense. The first month certainly makes sense. The first 2 months make sense. And especially if January and February are higher, that's when you can see a really big rally, even bigger than if all 3 of those other effects were triggered, up 20%. Basically, you have the bulls in control. I would say, to me, though, what stands out as just the most common sense, if the Q1 low is above the December low, it tells you that the buyers have a little bit more conviction for whatever reason. And of course, we have earnings starting soon.
Yeah, next week, JP Morgan. And jobs on Friday, too, right?
There's a lot there.
There is a lot there.
Vacation is over, friends.
Yes.
We're back at work.
We're back at work. We are in, well, we all have been in these seats for many days now.
Yeah, exactly. All I'm going to say is there's a lot of beaten down names. Many would say that are oversold technically, right? So,
well, you know, great point, because we actually have that happening today. We have Amazon up 1.6%. We have Meta up 3.8%. We have Alphabet up 1.1%. Last time I looked, PayPal up 4.4%. Not really for any reason, but for that reason that, like, they were beaten down, so folks want to go for what was beaten down. Will it work out better this year? We don't know clearly. One obvious exception, where is Tesla right now? So it's down still 14%.
I know, that's pretty
absolutely brutal. I mean, it's pretty clear there.
Yeah.
You know, because technically that stock had been attractive. Now it's less clear. Valuation is attractive. Folks wanted a blowout number. I mean, they put up a record delivery number, but because it missed the Wall Street estimate by a little bit, like, so investors just want to beyond perfect.
I do wonder at some point, are people going to be, but they're selling still a lot of stuff. So
Absolutely.
Fundamentally.
I mean, I truthfully, I've never been in a Tesla. I've never been like a Tesla nut bull, but I will say this.
You're going to ride in a Tesla once, and you're not going to be able to say that anymore.
Tim and I recently did with one of our suitors
when
we were out on the West Coast, and we actually were able to do hands-off for just a few minutes.
For just a few minutes.
You didn't fall asleep.
No, we didn't.
Get pulled over by the police.
But to your point, it's a real company. It sells real things. They put up they sold a record number of those things. You know, at some point, you're going to have some investors looking at that.
I see them all on the roads, even on the East Coast here. It's not just West Coast.
Everywhere.
Abigail Doolittle, great start to the new year. Of course, Bloomberg News Markets reporter Abigail Doolittle. She is here in our Bloomberg Interactive Broker Studio. All right, Tim, we're off and running. A new trading year officially underway. We've got a story that happens to be the most read on the Bloomberg. It's also our Bloomberg Big Take.
It's very, very long, 256 pages, but who's counting? Almost everything that Wall Street expects in 2023. With the story, we've got Bloomberg News senior editor and ETF czar Sam Potter staying up late for us in the UK, joining us via Zoom from there right now. Sam, good to have you with us. Good evening. Thank you so much for staying up late for this. I love this. It's comprehensive. It's exhaustive. What stuck out to you?
Hi, thank you for having me. Yeah, don't worry, it's not too late here at the moment. It's still early evening, so we're all right for the moment. What stuck out? Unusually, this is the 5th year that we compiled the outlooks from the major companies on Wall Street. And what stuck out to me was the unusual consensus, basically. Normally, everyone agrees roughly what the themes are going to be, but you get 10 banks saying this, 10 investment institutes saying that. This year, the consensus is pretty clear. Slowdown is coming, likely a recession. Mostly, people think it's going to be mild, but broadly, all but 2 or 3 names basically think that contraction is coming, not just in the US, but globally, already here, in fact, in Europe and the UK. So yeah, a tough year, essentially, from an economic perspective.
All right, so you looked at so many different things, Sam. You know, you talked to so many institutions, you looked at different themes, you know, everything from COVID to crypto, as you said, you just talked about recession, monetary policy. Is there anything that kind of surprised you as you guys were going through this? And as we reminded everybody, 256 pages.
Yeah, so the 256 pages, basically we took the top calls, the top outlooks from each institution, and there's almost 50 institutions in there, and each one had up to 15 calls that we, you know, that's the space we allot them. So that's why it's so long, just before our listeners decide that they're not going to look at this thing. You can sort through them using the various tabs and narrow it by theme. I think the thing that stuck to me, it wasn't actually a surprise, but it was kind of amusing, was the sort of absence of crypto. So in every year that I've been doing this, there's always been, you know, they had a chapter on crypto, and these traditional financial institutions are talking to their regular clients and trying to sell them a new blockchain thing or this new exchange that they're using or partnership they've got. That's been the case up until this year. This year, it's like they hit delete on the crypto chapter. Like just the mere mention of crypto has just disappeared. I think there's one outlook that I can think of that had a chapter on cryptocurrencies. The only other mentions were in the context of, you know, we have seen speculative bubbles burst, such as crypto, and that's the only reference they have for cryptocurrency. So they've gone from peddling this. They've gone from peddling this stuff.
You're breaking Tim's heart. I'm just.
It's fine with me. I mean, crypto's time. Perhaps it's come.
Yeah.
Sam.
Sorry.
No, that's
Sorry,
fine.
Tim,
It's good.
The show was great.
Thank you. Thank you. You can still catch older episodes of Crypto IRL. You can do that at Bloomberg.com/QT and also YouTube, of course. Sam, is that forever though? Does it look like, or is that just the way that the winds are blowing, you know, in a post-FTX, post-Three Arrows Capital world?
Yeah, I think the timing was kind of disastrous for the outlook's perspective, right? FTX really, the crunch time came October and mostly November, right? If I'm right. So I think, and that was right before they pushed the button for their outlook publications. Most start publishing in November and December. So I think that probably some swift work that was done to just remove a chapter on cryptocurrencies. I'm sure, you know, many of these firms have invested quite heavily in their technology, and I'm sure that it will be back when things settle down. But it's clear that this year they really felt it was better not to say anything at all than to try and grasp the kind of thorny questions about what happens with cryptocurrencies from here.
Hey, Sam, how did you think about, and safe to say, because we had some stories at the end of the year, that despite all of the intelligence on Wall Street and financial firms around the globe, a lot of people got it wrong, you know, in terms of maybe how 2022 would play out. Having said that, was there anybody on the list that really made a smart call in 2022 that you think maybe warrants a little bit more, you know, respect, if you will, when you think about what you guys put out there?
I'll be honest, there's no one that sort of superbly jumps out at me. I think that the start of the year, they all got the macro theme right, which was that the inflation was the big call. But no one really foresaw the major escalation of a war in Europe and what that would mean for energy and the kind of knock on. And I think most of, if you were to describe 2022, most of the year is defined by the Russian invasion of Ukraine in, I think it was late February, early March. So they didn't call it correctly. Most of the outlooks were wrong last year, but it would be probably wrong to sort of single anyone out. I think what's interesting is they keep showing up every year, and they, it's part of their job, obviously, but they have to show up. They have to make their forecasts, and obviously, it's pretty tough to say where the S&P 500 is going to be in 12 months.
Well, did it seem like, Sam, there was this, you said you've been doing this for years, and among the first was, a lack of mention of crypto. But was there also just a different tone this year, given that we were at record highs when this came out last year, and we haven't been at those record highs since this came out last year?
There's always a degree of humility in these things, and they always say, we could be out by this much, and these are our risk scenarios. And I tell you, they're also quite careful to put their predictions in ranges, and they also like to say this is the year that you will require active management, more than ever. You'll need our assistance to pick and choose your investment, of course. I think one of the differences this year is, for the first time, and this is obviously reflective of a change in investment sentiment that we know has been taking place, but for the first year that I can recall, fixed income is the hot property, basically. One of I think it was AXA described this year as bonds are back. That was their headline, or the year of the bonds, excuse me. And basically, after the year we've had in 2022, the way that bonds and credit have been absolutely crushed in this environment has left the valuations looking good. We're moving into a slower economy, at least that's the consensus view, and that makes bonds look attractive. And we think that rate increases are going to top out here.
All right.
So suddenly,
we got to run. I'm so sorry, Sam. I know, and there's a lot of folks who talked about the importance of having cash this year, so that tells you a lot. Sam Potter, this is incredible. Senior editor, ETF Czar, Bloomberg News is via Zoom from UK. Thank you so much for sticking around for us. We know it is getting later, though, there. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. The judge has set the Sam Bankman-Fried trial date of October 2nd, 2023. Today, Bankman-Fried pleaded not guilty to FTX fraud charges here in New York. The Dow, the S&P, and NASDAQ kick off the new trading year with losses. The Dow, the S&P, NASDAQ all in the red. Stocks are continuing to decline as investors remain on edge about the outlook for growth stocks after Tesla dropped the most since 2020 on demand woes, and declines in Apple dragged down key indexes. Right now, Tesla is down 13.3%. Apple shares, they are down by 4.2%. The S&P is down 31 now, a drop there of 0.8%. We've got the Dow down 184 points, drop there of 0.6%. NASDAQ right now lower by 1.1%. 10-year yield 3.78%, with the 2-year yielding 4.40%. Gold up 0.8%, 18.38 the ounce. West Texas Intermediate crude now down 4%, 76.97 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, we talked a lot about migration patterns here in the United States during the pandemic, the way that Americans move from places like the Northeast and West to other areas, including the American South. Well, nearly 3 years after the start of the pandemic, the South, Tim, still apparently a pretty hot place to go to.
Yeah, according to some recent U.S. Census data, the South was the fastest growing region in the U.S. in 2022. Here's the question, why is this still happening? Because we're going back to work, we're understand remote work in the hybrid environment. Well, Connor Sen, who's the founder of Peachtree Creek Investments, a Bloomberg opinion columnist, you also know him from Twitter because he's pretty prominent there as well. He's based in Atlanta. He answers that question for us in a piece today. He joins us on the phone from Atlanta. Connor, good to have you with us this afternoon. So why are people still moving to the South?
So I think there are a couple reasons. The first one is that the millennials were kind of in their 20s in the 2010s, and when people are in their 20s, the places that are more popular migration destinations are your New Yorks, your Californias, places to start out your career, where maybe apartments are more important than homes. People don't need to worry about kids and childcare as much. And millennials have gotten older, and the same destinations that are popular in their 20s aren't as popular in your 30s. And so I think you're seeing those sort of traditional Sun Belts, suburban areas sort of grow in popularity as millennials get older. And then the other factor is that home prices fell a lot after 2006, and I don't think people appreciated just how long in much of the country it took for home prices to recover. And the surge in home price appreciation we've seen over the past few years finally let a lot of older homeowners get out from under their underwater mortgages and let them move in a way that maybe they couldn't 10 years ago.
Connor, I have to tell you, anecdotally, 2 members of my family, one who was semi-retired, moved pre-pandemic, just maybe a year or so, to South Carolina, or just outside Charleston. I have another member who, he and his wife, younger, they're both working, but they can work from home, and they decided, you know what, I want to go closer to more members of our family, and also moved to outside Charleston, South Carolina. And they have 2 young daughters, one in college, one who's not, but who can also work from home. So there you have a boomer, or close to a boomer, and a youngish millennial, probably younger than a millennial, both moving down south, at least for now. And it's just interesting. I'm hearing a lot about the trend, cheaper taxes. And for the first time, both of my family members are saying, we're making money on real estate, and we sold at a good time as well. Does this continue?
I think it does, because again, the sort of factors that maybe held back migration in the 2010s, millennials not being old enough, baby boomers maybe having underwater mortgages, those aren't in play anymore. And I think remote work has made, the job market, maybe you wanted to live outside of Charleston all along, but the job market there wasn't very great if you were in Boston or California or New York, something like that. And so that's less of a problem now. The cultural amenities here have converged somewhat with the Northeast and the West Coast, so that's an easier sell for certain people. And housing costs are still cheaper, although that is converging over time.
Do you think, Connor, we're going to start to see policy changes in states that people are leaving from to try to continue to attract and retain people, at least for the longer term? I'm not saying that there's necessarily going to be mass housing built in New York City and San Francisco that will decrease the price of housing, and per square foot, you'll be able to get a home in Atlanta at the same price as a home in San Francisco or New York by any means. But policymakers have got to be paying attention to this.
Yeah, and you've already seen, I think the governor of New York and the mayor of New York City have said, we need to keep our people. We can't let them all move to Florida. And that's sort of the first step of acknowledging the problem. And, you know, a lot of these places have kind of gotten away with not having to do traditional economic development for a long time because they could just rely on people moving to cities and clustering and knowledge jobs and things like that. And they let a lot of problems fester. And so I think they're going to have to probably do a lot more sort of maybe traditional Sun Belt blocking and tackling on economic development and more of a pro-business climate, focused on retention, focused on a talent attraction. And, you know, I don't know what that looks like in a higher cost environment, but that's probably the kind of thing that we're going to be talking about over the next several years.
You know, you write about things, Connor, with an investment, you know, lens, if you will. So what does this mean, do you think, for investors in terms of trends that might shape or become, you know, part of our landscape? Maybe if it's this year or going into next year or over the next few years.
I think when it comes to the housing market, that's going to make sort of the recovery a lot more uneven. And so maybe you're going to see more of a recovery sooner in Texas and the Southeast than you will in the Northeast and California. Even though during the pandemic, you didn't see the booms as much in the Northeast and California as you did in some of the Western and Southern markets, because the migration is negative there and also higher mortgage rates makes already expensive housing markets even more expensive. It's harder to see what's going to lead to a strong recovery there versus places where people are moving to.
Connor, the job market is really strong still, despite the fact that we're seeing some economic weakness, which we'll talk about in just a few minutes. So it's a pretty good time to be looking for work. And I'm wondering when or if we start to see that narrative change. If unemployment rises, if we start to see a recession play out at least in the jobs market, companies won't offer the same flexibility for remote work. And they're going to say, you know, wait a second, we want you to be close to our Menlo Park or Cupertino campus and commute in Northern California to campus rather than work remotely. Does that change things? Does that happen?
So I think there's a debate whether, to your point, as the job market weakens, to the extent it does, will that pull people back into the office? Or will it also cause people to say, you know, Barry and New York are very expensive, office space is expensive, we should close down our offices here and open them in the South? So sort of more of an outsourcing type story. So, you know, it might be kind of a careful what you wish for story if you're in New York and California, hoping for maybe a little softness to get you back. It might just be, all right, now we really need to move our offices to these cheaper places as well because we can't afford to pay people what we've been paying them in California over the past several years.
I also do wonder, though, how it politically changes the landscape. For my family, who were all kind of East Coasters, they talk increasingly about kind of a more purple, if you will, South Carolina, although it has a ways to go. But it's interesting. I do wonder how the political landscape changes things and how that impacts either policy or, again, kind of plays itself in an investment
I mean,
way.
there's probably no person better to talk to than Connor because he lives in Atlanta and he's kind of seeing this play out in a state that is like the new purple state.
Well, and I think it's also interesting, and maybe New Yorkers don't appreciate this, is the biggest red wave in 2022 was arguably in the suburbs of New York. And so is that a sort of a fluke thing because of maybe a bad Democratic election, or is that showing a purpling of the New York suburbs in a way that maybe isn't appreciated yet? So, you know, maybe the South is getting more Democratic and then parts of the coast are getting more Republican as, you know, so maybe concerns about this migration and taxes and crime are piling up.
I do wonder, too, you know, one of the other things that Connor, Tim and I have noticed as of late, we talked about this with our TV colleagues over the last couple of weeks, too, is this whole idea that we kind of continue to hear from CEOs and others about the importance of allowing, you know, legalized immigration. That would help out the labor market. There are jobs that Americans, young Americans, all Americans that don't want to do, but, you know, immigrants would welcome to do, and maybe how that might help ease some of the tensions and tightness in the U.S. labor market. And then I do also think about, you know, how that could impact kind of our landscape going forward. How do you think about that as a trend, maybe, and also impacting maybe where people ultimately live?
Yeah, I think it's very important because traditionally the way that New York and California gained people was through immigration. So you'd sort of take in immigrants and then people, sort of Native Americans, would leave for cheaper locations. And if the immigration piece is down, then you have the people leaving, but not the people coming in, which is part of the problem. So to the extent we can make progress in immigration and get those numbers up, that's probably the kind of thing that would really help New York and California sort of combat this migration weakness they're seeing domestically.
Connor, I want to shift gears a little bit because you write about all this stuff, and at Peachtree you also pay very close attention to it and what it means for investors, for your clients as well. Let's talk about what we have coming up just in the next couple of weeks. We got jobs numbers coming this Friday, so the most recent payrolls report for the month of December. And then we also have earnings starting in earnest next week, with JP Morgan and other banks reporting as well. What's top of mind for you over the next few days as we kick off the year?
I think coming into the year, just people are incredibly negative about the market, the economy. People are sort of calling for a recession as soon as this quarter, which to me is kind of nuts because the Atlanta Fed GDP nowcast today predicts that Q4 GDP could be as high as 4%, which is certainly not the conventional wisdom. We also had a big sell-off in the dollar, which could support the earnings of multinationals. So I think that the sort of near-term growth story, near-term earnings story is better than consensus. And maybe we have this recession thing down the road, but the market feels kind of offsides right now versus what the data could show over the next several weeks.
Hey, Connor, just got about 30 seconds left here. Is there an investment idea, company, name, trend, sector that you're interested in and excited about for 2023? And just got about 30 seconds.
Yeah, sure. I think just the banks are in a better place than people appreciate. And, things aren't as bad domestically as appreciated. They've got stress tests, making sure that losses aren't sort of catastrophic. And to the extent we muddle through, I think banks are a decent place to be.
Well, so great to check in with you. Again, another great setup as we kick off this first trading day of 2023. Connor Sen, thank you, columnist at Bloomberg Opinion. He's the founder of Peachtree Creek Investments, joining us on the phone from Atlanta. His story and more from Bloomberg Opinion on the Bloomberg and, of course, at Bloomberg.com/opinion.
Yeah, also give him a follow on Twitter. He's really active there. And FinTwit at Connor Sen is what he goes by on Twitter. Taking a look at the markets, Carol. Look at that. We're still seeing a down day on this first trading day. The S&P down more than 1%.
All right.
Let's get to world and national news. Nancy Lyons is in our 991 newsroom in D.C. Hey, Nance.
Thanks, Tim. It has been an explosive start to the new Congress, with Kevin McCarthy failing to receive enough support to take over as Republican Speaker. He spoke ahead of today's first vote.
We may have a battle on the floor, but the battle is for the conference and the country, and that's fine with me.
McCarthy needed 218 votes. He received 203. They're now on their second vote. This voting will continue until a candidate receives a majority. No House business will take place until a speaker is selected. In another bit of drama, New York Congressman George Santos, who has admitted making up much of his resume, is poised to be sworn in as a member of the House. This is despite federal and local officials opening investigations into the discrepancies and about questions about his finances, including those of his campaign. FTX founder Sam Bankman-Fried pleaded not guilty to criminal charges today, and that's now set to face a trial in October. It's expected to be one of the most high-profile white-collar fraud trials in recent years. Bankman-Fried appeared in U.S. District Court in New York wearing a blue suit, white shirt, and blue tie, and sitting at the defense table between his lawyers. President Biden plans to kick off the new year touting his accomplishments of the last two. He'll be in Kentucky tomorrow at an economic event with, among others, Senate Minority Leader Mitch McConnell. Bloomberg's Joe Matthew reports the second half of the president's term will present some challenges.
If President Biden spent the next 2 years actually focused on implementing and funding everything he got passed, beginning with the infrastructure bill, now law, it would likely be a full-time job.
Bloomberg's Joe Matthew reports the Biden administration is often butting heads with state and local officials on how to spend the money, and he'll need to sell his agenda to voters ahead of a possible re-election campaign. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. We begin with developments out of Washington. The vote is ongoing, but Kevin McCarthy lacks the votes on a second tally for Speaker. Stay with Bloomberg for the latest on this developing story. We've got the Dow, the S&P, and NASDAQ all in the red right now, with the S&P down 41, drop there of 1.1%. Stocks continue to decline as investors remain on edge about the outlook for growth stocks. Case in point, Tesla down 12.7%. Apple right now down 4.3%. Again, the S&P down 1.1%, NASDAQ down 1.3%, and the Dow lower by 255 points, down now by 0.8%. 10-year yield 3.78%. The 2-year yield 4.39%. Gold up 0.7%, 18.36 the ounce, while West Texas Intermediate crude down 4.4%, 76.77 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This week, don't forget, we're going to get minutes from the last Fed meeting. That's tomorrow. And then we've got our first Fed meeting. That's going to be February 1st. Another year, but it's also going to be another year where we talked about the Fed a lot last year. We're going to talk a lot about the Fed this year. And with that in mind, in the upcoming new issue of Bloomberg Business Week out later this week, a profile of Susan Collins.
That profile written by Janelle Marte, economics and Federal Reserve reporter at Bloomberg News. She joins us via Zoom this afternoon. Also with us right now is Bloomberg Business Week editor Joel Weber. He's with us in our Bloomberg Interactive Brokers studio. I love this profile, Joel. MIT, Michigan, and Jamaica are places where Collins is looking based on her experiences in those places, visiting those places, working at some of those places to bring her approach to the Fed, a job that she's only had for, 6 months at this point?
Yeah, that's right. So part of why I think this is a significant story to start talking about at the beginning of this year is actually this is the most diverse the Fed has really ever looked, and there's still room for improvement. But Susan Collins, first Black woman to head a regional Fed bank out of Boston. What makes her incredible is sort of this backstory that you briefly mentioned there. And what I find just so compelling about this is we get to now see the Fed grappling with, for the last year and change, it's been this unprecedented moment with inflation. But we also get to do it on the heels and ongoing awareness of how much inequality there is, of both racial and economic in the country. And so in many ways, this is like the perfect challenge for somebody like Susan Collins. So Janelle, talk to us more about her backstory and what she brings to the Fed, which it's worth also mentioning here that she is not a voting member on rates for this year, but she is part of the discussion.
Yes, so Susan Collins came to the Fed. Her background was largely in academics before. She was at the University of Michigan, where she was most recently the provost, but was also a dean there of the Ford Public School. And she was not a stranger to the Fed because of her role at the university, but also she was already a regular at the very famous Jackson Hole symposium that happens every year. So she was in this circle of monetary policy makers. But this is her first time in a role where she's actually helping to decide that policy. And last year, she jumped right in, 3 weeks into the job, had to start voting, and has been pretty vocal in the last several months. And I would say that one of the things I've noticed after spending some time with her and talking to her a little bit is that some of the themes that she encountered as a child, spending her summers with family in Jamaica, things that she still reflects on now, and with the lens of her expertise that she developed, having a PhD in economics from MIT, and the research that she's done, is she started to see these issues early on, right? So inequality in Jamaica, noticing the difference in living standards, and comparing that to what she saw here in the U.S. growing up in Manhattan. She talked to me about reflecting on how communities really struggle there when the country introduced its own currency, and grappling with that as a child, and then how that came into play later on when she became an economist.
So what do you think, I know it's hard to speculate on this because so many of the Fed discussions happen behind closed doors and we get very few, very few moments of smoke drifting out in moments of like dot plots and stuff. But what do you think the conversation with her is like, and what does she bring to that table with her experience? And what do we know about the dynamic that she brings to the Fed as they continue these discussions about where rates and other things might go?
So one thing that she's talked about when meeting with community groups here in the U.S. around her district is that she really believes that the Fed's mission is to create an economy that doesn't just work for some people, but that it works for all. So I feel like that's one of her big messages in the role is that she thinks that the Fed has a priority to really have an inclusive mission here. And that's going to be important as we move forward this year. You've already talked about the rate increases. And the next phase for the Fed is really to figure out, all right, well, where are we, how is this showing up in the labor market? And when is it time to stop? When will it be time to cut back on the rate, cut back on rates, essentially? And so I think this focus that she has on inclusivity, on having an economy that works for everyone, could play a bigger part as the Fed really shifts its focus to the labor market.
But as you write, the problem that we could be facing as a country, if we do see weakness that is brought on by the Fed, as you write, Janelle, is that marginalized workers, including Black and Hispanic people, often are the last to benefit from an economic expansion. They could then face the brunt of economic pain if we do see any sort of weakness or a recession. How is she thinking about that?
That's something that she mentioned to us. We had a meeting, she met with some reporters in Boston not too long ago, and she said that she takes that very seriously, that she recognizes that it could be marginalized workers that carry the worst of the pain there. And so I think that'll be on her mind. She's still, of course, very focused on bringing inflation down, and has supported the rate increases that the Fed has done so far. All of the votes have been unanimous. So the Fed is very unified.
Right.
I think it'll be interesting to see where she stands if we start to see more division later on.
Janelle, what I think is interesting, and you highlight it in your piece, you talk about how she has this wonderful knack of combining math with her interest in social issues. So I feel like a little bit of left-right brain stuff going on. But for a Fed that constantly reminds us that they are data dependent, she's going to pull in the data to say, this is why we have to have a recovery where everyone participates. And I wonder how that's going to play out among the Fed members.
Yes, I mean, that was something that came across with me speaking with some of her former colleagues and former professors, that they all had that comment that she was really, she relies on the evidence. She's evidence driven, was always that way from her undergraduate days. And so also she seeks input, and she likes to match the data to stories. And you can already see that in the way that she prioritized traveling around the district, meeting with different stakeholders, the workers, the community groups that are affected by the Fed's rate increases. So I think she'll be combining what she hears from people on the ground with what she sees in the data, and that will definitely influence her decision making.
So what do we think, this, just bringing it back to the Fed, this being the most diverse Fed we've seen, there's still not a Hispanic member in that group of people behind closed doors. How much tension is there on Jay Powell and others to make sure that they become even more inclusive? And what do we expect on that front this year?
And just got about 30 seconds.
So there's certainly a lot of pressure on the Fed to continue to increase its diversity. We have one more open slot coming with the Kansas City Fed president that has to be announced after Esther George retires. So, there's an opportunity there for them to do something. We'll see how it all plays out.
More diversity has to change the way the conversation moves, right? At the Fed, no doubt about it, Joel.
Yeah, I just think it was something that we were not aware of, and then we showed how important it was to be more aware, and it actually just might make the economy stronger even. So.
Yeah. All right, well, it's an incredible story. It's coming up in the new issue of Bloomberg Business Week. It'll be out later this week already on the Bloomberg and online at bloomberg.com/businessweek. Joel Weber, editor of Bloomberg Business Week in studio. Janelle Marte, she wrote the story here at Bloomberg News. This is Bloomberg.
It is 2:53 on Wall Street. I'm Charlie Pellet with a look at some of today's company headlines. Apple has fallen out of the $2 trillion value club. A steady slide in Apple shares pushed the iPhone maker's market value below $2 trillion, the latest casualty in the tech stock rout. Apple moved lower as concerns about iPhone supply in the important holiday quarter mount, and investors lose faith in a reprieve from higher interest rates. Apple shares now down by 4%. That is certainly weighing on the NASDAQ 100 index, which is down by about 0.7%. Tesla shares are plunging to start the new year, down now by 11.8%. Tesla delivered fewer vehicles than expected last quarter, despite offering hefty incentives in its biggest markets, reinforcing demand concerns that contributed to the worst month and year for the electric car maker's stock since its 2010 initial public offering. Several analysts have cut price targets on the stock. JP Morgan Chase says Tesla might never again reach its multi-year 50% growth sales objective. Again, Tesla now down by 11.8%. Analysts at Barclays say Rolex has raised prices in the U.S. and U.K. by an average of about 2.5%, the latest increases for the top Swiss watch brand. And Shopify is cutting meetings as employees return from the holiday break. The Canadian e-commerce firm says it is conducting a calendar purge. And those are some of the company stories that we're following. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week on this Tuesday, January 3rd, 2023, the first trading day of the year. Let's get on over to Washington, D.C., where Nancy Lyons is standing by in our 99.1 newsroom for world and national news. Hey, Nance.
Thanks, Tim. Kevin McCarthy's chances of becoming Speaker of the House remain in doubt, with Republicans prepared to take control of the chamber. McCarthy lost in the first round of voting. The second round is underway. Ohio Congressman Jim Jordan then spoke to his colleagues on the floor before that second vote.
I think Kevin McCarthy's the right guy to lead us. I really do, or I wouldn't be standing up here giving this speech.
Congressman Jim Jordan. Earlier in the day, McCarthy himself spoke about the tight race.
I will always fight to put the American people first, not a few individuals that want something for themselves.
McCarthy's loss in the first round of voting was the first time in a century that a speaker has required multiple rounds of voting. China's new foreign minister is singing the praises of Americans as he steps into his new role. Qin Gang was most recently China's top envoy to the U.S. In a tweet, he says he was deeply impressed by the, quote, hardworking, friendly, and talented American people that he met. Bloomberg's Anne-Marie Hordern reports it's another sign of thawing relations between the U.S. and China, but fundamentally, she says not much has changed.
The armies are not communicating, but also the fact that China has not condemned the war in Ukraine, and they continue to support Russia economically by buying and continuously buying their fossil fuels.
Bloomberg's Anne-Marie Hordern in Washington. Dangerous weather is slamming millions of people across the country. Suspected tornadoes touched down in multiple states overnight in the South. Meanwhile, in California, a monster storm has hammered several parts of that state with rain, snow, wind, and historic flooding. The disgraced young crypto king has pleaded not guilty to fraud charges. Sam Bankman-Fried, the former CEO of FTX, accused of stealing billions from customers since 2019, entered his not guilty plea in New York federal court this afternoon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. That small businesses impacted by the COVID-19 pandemic may qualify for the Employee Retention Credit. Let Innovation Refunds do the work to find out now if your organization qualifies for ERC assistance. They've already helped businesses claim over $2 billion in payroll tax refunds. Learn more at getrefunds.com.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, Tim Stenevec, and Charlie was mentioning, of course, one of the headlines that just crossed, about an hour or so ago. Sam Bankman-Fried pleading not guilty to FTX fraud charges in New York, and the judge in that case setting his trial date for October 2nd, 2023, so later in this year. So this is going to be a year where we will continue to obviously talk about this story.
Yeah, it was kind of like the big crypto story of 2022, and it certainly continues to unroll and unfold before our eyes. We're going to be speaking with Sonali Basak in just a few minutes. She's outside the courthouse down in Lower Manhattan. What are you going to say?
Well, I was thinking what Sam Potter said to us, and like the things
that
everybody's going to be talking about, or what you need to know from all of those who follow the financial markets. And one of the things he said that people didn't talk a lot about was crypto, although he said some of it was based on research.
Yeah, I said it in previous years. And by the way, if you missed this story, check it out on the Bloomberg terminal and at Bloomberg.com. 256 pages if you print it all out. But read it online because you can actually arrange it by different themes, in terms of growth, in terms of what markets are going to do, and it just talks about what all the Wall Street firms are going to look at. He said what stood out to him this year is there was no mention of crypto.
It's kind of interesting.
It was
There's
really
a lot of talk
interesting.
about expectations for a recession, a lot about concerns about growth and policy and what the year is going to look like, but not so much on crypto. We're going to talk, though, more about crypto with our own Sonali Basak, also with about Blackstone, kind of doubling down and getting a big investment when it comes to their real estate pillar play. That's coming up. You are listening and watching Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left in the trading session, very first session of the new year. Romaine Bostick joined right now by Damian Sassower, sticking with us as we count you down to the closing bell. And as always at this time, we're joined by our wonderful, beautiful colleagues, Carol Master and Tim Stenevik. Great to see both of you. Happy New Year.
You must have liked working with us last year.
Yeah, well, it's a new year, a new me. This will probably last about 48 hours, and then we'll be back to normal.
We'll treasure all 48 hours.
Well, we'll treasure all, yeah, definitely treasure it here. I'm not sure if investors right now are treasuring it right now. You have a market. I think, guys, I mean, you were here last week. This is kind of how we ended last year. A lot of concerns about the Fed, a lot of concerns about the economy, and that seems to be spilling over here on this first day of the new year.
Yeah, and tech, once again, a big drag, right? We talked about that a lot last year. Having said that, one thing I talked a lot about, out with the old, in with the new, well, maybe sometimes the old is the new again. Again, Chinese names are something that continue to be a standout. You knew I was going to go there. Come on, I had to. In a market where so much stuff is down, here's a group that continues to trade higher, up almost 4% if you look at those Chinese ADRs that trade here in the United States. Folks, they are up more than 50% from that October low. They're still down 70% from that February 2021 high. Pick out some specific names. Pinduoduo up more than 4%. JD.com up almost 3%. And we're looking at a more than 4.3% gain on shares of Alibaba. So again, China reopening. We maybe have hit a pandemic peak and COVID cases peak, but stay tuned for this one. We'll be talking a lot about it.
I'm going to talk more about it because I'm looking at Chinese stocks or even U.S. stocks that have exposure to Macau. Companies like Wynn Resorts, we got Las Vegas Sands, Melco Resorts and Entertainment. JP Morgan said it remains bullish on Macau casino operators, including Melco, higher today by 5.3%. So, Romaine, I'm looking for green anywhere I can find it on the first trading day of the year.
You can certainly find it out there. There are definitely people out there looking for bargains, but of course, in aggregate here, you have a market that remains lower, 38.18 on the S&P 500, down about 0.5%. The NASDAQ indices down about 7 to 0.8%. Similar story for the Russell. A lot of concern here about valuations, and more importantly, I guess, proper valuations, depending, Damien, on where you think earnings are going to go and where you think the economy will go as well.
Romaine, what's wrong with this equation? We have Carol talking about Chinese equities. I'm going to talk about U.S. stocks. I'm going to talk about Meta. I'm going to talk about Disney. I'm going to talk about Comcast.
Bizarro world, Damien.
I mean, Carol, the communication sector is up and up big this morning, today rather, and you've also got financials up slightly. I think Barclays upgraded a few stocks like Key Corp, U.S. Bank Corp, but it's energy on the bottom of that stack, man. I mean, oil prices are down and energy is suffering.
Well, we talk, of course, about some of the individual movers. Well, one of the bright spots today actually is in the financial space here. JP Morgan shares up about 0.4%. That may not seem like much, but pretty much across the board, at least with some of the bigger banks, they all seem to be rallying here. There have been a lot of concerns, I guess, about some of the valuations, whether they were too low, whether investors hadn't necessarily been giving them credit. Remember, Mike Mayo was a few weeks ago said this could be a big year for bank stocks going forward. Zillow shares also higher on the day, up about 4%. As far as the big cap tech names, Microsoft down about 0.2%, and Tesla right now down 12%, having one of its worst days going back to 2020. Another stock also having a worst day is Apple. Apple shares down about 4% here on the day. And I was taking a look at the market cap here because we talk about a company, at least a stock, I should say, that actually hit that $2 trillion market cap a couple of years ago. I think it was in August of 2020. It looks like today, depending on how things shake out, it could actually lose that $2 trillion market cap crown. One of the last companies out there still to hold on to it. Microsoft, of course, lost it a few months ago back in mid-2022. But that's that's the setup right now. Even a company like Apple sort of getting thrown out here. A lot of concerns, real concerns, we should say, of course, about iPhone sales and some of their connections right now to the Chinese market. We'll see whether this persists, Carol, deeper into the year.
Yeah, and still $405 billion in revenues projected for that company this year. So an interesting one to keep an eye on. Having said that, a lot has to do with what the Fed ultimately does, what kind of recession potentially we get here in the United States. A lot of folks expecting it, but will it be wide? Will it be deep? One person weighing in on that is Bloomberg opinion columnist Bill Dudley, of course, the former head of the New York Federal Reserve. He caught up with the gang over at Bloomberg Surveillance earlier today. Here's what he had to say about the likelihood of a U.S. recession.
Recession is pretty likely just because of what the Fed has to do. But what's different this time, I think, is that if we have a recession, it's going to be a Fed-induced recession. And the Fed can end the recession by subsequently easing monetary policy. The challenge for them is to not ease too soon.
Of course, that's Bill Dudley, former head of the New York Federal Reserve, a Bloomberg opinion columnist. He also went on to say, he talked about the Fed needing to drive up the unemployment rate sufficiently to slow down the economy to generate slack in the labor market. How many times did we talk about that? This is the interesting thing that's going on. We're talking about a slowdown, but we talk about, right, the possibility of having a recession with somewhat of a strong labor market. Certainly things continue.
And I think it's interesting. We heard a little bit earlier from Alan Greenspan, of course, the former Fed chair who now works at Advisors Capital Management. He was giving I guess his general market commentary that was actually published today on the website. He does see a recession coming here in 2023. Does think that it's going to be a mild recession, but I thought it was interesting. He basically said he doesn't think the Fed can avoid it at this stage, given how far they let inflation run before they started off on this rate hiking cycle.
Well, a couple questions I have are we going to know that we're in a recession when we're in a recession? Has a recession already started? I would say no. I've asked that question to a lot of folks already who point to that strong labor market. They point to the strong labor market and that it's tough to say that we're in a recession if month after month we're getting more than 200,000 jobs added. We'll see what December has in store.
This is our first disagreement of the new year. I think we're going to know it. So, yeah.
That portends a good year, Romaine. You know, it's healthy. It's healthy.
As January goes, so goes Romaine, or as Romaine goes in January?
I think that's a technical, yeah.
Well, Tim, I have answers for you. I mean, this is phase one of rate normalization, okay? I mean, we're seeing payer skew, we're seeing bid for receivers in the fixed income market. For me, this is kind of setting up nicely for bonds in the new year.
I'm glad you used the word normalization because I feel like we don't hear that word enough. So many people just focus on this idea that, they're just fighting inflation. I mean, Jay Powell made it clear, even before he started hiking, that this was also not just about fighting inflation. It really was about getting us back to something that resembles normal.
Zero rates are not normal?
Not forever, man.
Oh, okay. Sorry.
And think about all the Fed papers. I mean, Damien, I know you read all the Fed papers that have been written basically saying staying at that zero bound might have been one of the biggest mistakes I think we've made when it comes to monetary policy, at least in the modern era.
Absolutely, and I think what people are ignoring is that when you do go into a U.S. recession, credit spreads blow out and equities decline, and we haven't seen that gap move yet. And so I think that's the big risk. I think that's why investors are sitting on their hands. But look, I mean, we could push back this earnings recession a little bit further down the road, and we could see equities rip. So it's that confusion, it's that sort of dichotomy that I think that investors are struggling with right now.
No, but I think you guys hit it. Like, what is normal, right? And for so much, we got very spoiled coming out of the financial crisis that we thought that was normal, and many would remind us historically that that wasn't. So, how will the markets, take it as we get back to maybe a higher interest rate environment that is much more normal, higher mortgage rates that are much more normal, a lot of different things. How does the world take it? How does it, kind of the world remember what normal is supposed to be? So, all right, we're going to continue this conversation. We'll be back in less than an hour's time. Our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Quick Take Beyond the Bell. We will count you down to the bell on this first trading day of 2023. We'll see you back at 4 p.m. Wall Street time. Carrying over into 2023. We mentioned Sam Bankman-Fried pleading not
guilty.
Did you say
guilty or not guilty?
Not guilty.
Okay, just making sure.
I was just doing, a little Barbara Streisand and Mr. Gibbs there.
Okay.
That guilty song. Do you remember that album? Probably
I don't. Is it one I'm going to have to listen to on the way home today?
We're taking you back here on Bloomberg.
I'll do it.
Sam Bankman-Fried earlier pleading not guilty about an hour ago to FTX fraud charges here in New York. He was there in person. Our Shonali Balsic has been covering it, and the judge setting that trial date for him on October 2nd of 2023. So we're already marking our calendars when it comes to that.
Yeah, he's also asked a judge to keep confidential the identities of two people who are helping him secure his $250 million bail package. This to protect them from public scrutiny and potential harassment. I think it's, I would like to know the names.
Yeah, it's kind of interesting. How does that work? Do we all normally know who is kind of, we don't usually care as much usually.
It's a good question for Shonali.
But maybe we care. Yeah, exactly. And she's been down there, and so hopefully we'll get to her shortly. I believe she is ready. Shonali Bostic is live outside the courthouse for the Southern District Court of New York in New York City. Shonali Bostic, she is busy on her BlackBerry, and hopefully she's going to come to us in just a moment. I actually not quite sure that she is ready.
Oh,
yeah, she's not ready, but
Excuse me.
it's been a little bit crazy as the headlines
She's
have been
doing
crossing.
TV hits, she's been doing radio hits, and she's been keeping an eye on everything that's been happening down there as well.
But it is interesting, what will be the crypto story for 2023? This is something, Bitcoin, I saw something on the terminal. Was it a year?
Happy birthday, Bitcoin. Is that what you saw?
Why is it happy birthday?
I think it's the 14th birthday. I have to go look.
14th birthday.
I think that's right, yeah.
Okay.
I think that's
not
right.
the first birthday.
It's a
Well,
teen.
and this is the thing. Crypto has been around for a long time. We know that. But you do wonder what kind of shaking out. There's many cryptocurrencies out there. There are more that certainly garner some respect among investors. That's for sure.
All right, Joe Weisenthal bringing this to our attention of the Odd Lots podcast. Happy birthday, Bitcoin.
Right.
It was on this day 14 years ago that the first Bitcoin block was mined. Despite numerous doubters, haters, and premature obituaries, its performance has been quite impressive. Okay, so it's 1,690,706,971% gain.
From its first?
Yeah.
Yeah, that's not too bad.
It's not too bad.
I take that return. Despite the carnage that we've seen over the last year or so. Bitcoin, by the way, today down about 0.7%, down $113. 16,637 is the last trade. Ethereum, we're talking about it, down about 0.8%. And yeah, those are the two that I feel like, I don't know, deem the most or garner the most respect. Is that fair?
Yeah, certainly. I mean, some people would refer to them as quote unquote blue chip. I don't know how you do that if they don't have cash flows, but that's what some people would refer to them as. Still, though, if you go to CRYP Go on the Bloomberg terminal, there are a handful of other coins that are kept track of there. Gone are the days, though, Carol, I think, of, the tens of thousands of coins that are so-called S coins that we were talking about a little over a year ago.
It's interesting, too. Sam Bankman-Fried did appear in U.S. District Court in New York. He was wearing a suit. He did, put in that plea of not guilty, not unexpected, and it does buy him, as many of the experts are telling our team, it does buy him some time. So right now we do want to head downtown.
Yeah, Shonali Bostic is live outside the courthouse for the Southern District of New York here in New York City. Shonali, good to see you this afternoon. We saw the footage of Sam Bankman-Fried going into court earlier today. What can you tell us about what's going on?
Yeah, too bad I wasn't with you 5 minutes earlier. We saw him leaving the courthouse, and it was quite a scene here. He was being sworn by reporters, by media, by a number of people. The courtroom itself was an overflow. This is such a highly watched case, guys. And to the point that you're making, not only did he plead not guilty, there were some really interesting points of contention between the prosecutors and defense. Namely, the point of contention was to modify the bail terms to include the fact that he cannot access any FTX or Alameda assets. Remember, he has recently said online that he has not been, that he can't access these assets, but there are allegations here that he had some relationship here to some of the funds that we have seen transferred. Now, again, this is something that is a separate case that the Department of Justice is looking into, in addition to the accounts that you are just simply seeing here today. So there are a few things here going on at the same time. The other thing that had come up as well, remember, this whole thing lasted like 40 minutes. So a lot happened very, very quickly. And what we had heard them talk about here is also like the order of bankruptcies and what Sam Bankman-Fried hoped to accomplish between the Bahamas and the United States. He did file for bankruptcy first in the Bahamas ahead of that U.S. bankruptcy filing that we saw. Remember, he's taken issue with the bankruptcy process itself. At points in time, the Bahamian authorities have, or the liquidator rather, had an issue with the U.S. bankruptcy relative to Bahamas as well. Now starting to play a role very early in an arraignment that has set a trial date now for early October 2nd, 2023. This is really only planned to be months away. and the prosecution is expected to deliver its evidence within the next 4 weeks or so.
Hey, talk to us about the mood as all of this has unfolded. I think, I have to say, for some reason, I went back to like Bernie Madoff, and I'm not, this is what they're going to figure out. Was there fraud or what? These are allegations, and this is what the trial will certainly bear out. But I just remember it being very aggressive with the press kind of going after, Bernie Madoff and just kind of bungling, and it was just very physical. What was it like around Sam Bankman-Fried? Were there a lot of people around him, or were the press pretty aggressive trying to get close? Just kind of walk us through it, set the scene.
Yeah, the scene is kind of interesting down here in Manhattan right now because it's raining. It was raining very hard. So it's probably not as many people as you thought there would have been, right? I mean, I definitely, walking out of the courthouse, saw press, because remember, you cannot take any phone or electronics into the courthouse either. So we saw press running out to try to file very quickly. But remember, this is interesting. It is different in so many ways from the way that the Madoff trials had gone on. Bernie Madoff had essentially turned himself in much earlier. That was kind of how the whole thing started. Whereas Sam Bankman-Fried, not only has he been pleading not guilty and denying a lot of these allegations, before he was arrested, he has already been saying that he did not intend to do a lot of what he's now being accused of. So this question of intent is another question. Remember, in the weeks following now, we will see the prosecutors present evidence, but then we'll also hear motions from Sam Bankman-Fried's side. So this October 2nd trial may drag on longer depending on what we see happen between now and then. But should we see an October 2nd trial, just everything kind of work as it says it's going to today, that trial should last a number of weeks. But again, it never works out. That simply does it. And to the point you're making about the press and the role of the press, this and now Twitter and many other constituents watching, remember, guys, this scrutiny is why they want to keep the co-signers to the bond package secret, according to a filing from his lawyers today.
So, Shonali, what happens from now until October 2nd to Sam Bankman-Fried? Does he remain under house arrest or custody of his parents? I don't know what the proper term is, but he's certainly electronically monitored. He's out on bail right now. What's he allowed to do? What's he not allowed to do in terms of his own freedom?
Well, there's a few things. One, I mean, this is a $250 million bond package that is secured in part by his parents' house. Remember, the co-signers on this bail package, on this bond, remember, they are now working with prosecutors to interview those essentially co-signers. So that will happen in the coming days. The rest of his bail terms include, staying at his parents' house in Palo Alto, California. And it also has a certain amount of monitoring of how he spends his finances above a certain amount here. So there is some level of keeping track of where he is, certainly, but he's certainly not in jail either, right? I mean, this is why he was extradited to the United States,
right?
Very much in part to be out of that Bahamas jail and to be more comfortably at home.
Hey, Shonali, everything that's happening obviously gets in process, the beginnings of a trial. Right now we do the countdown to that trial date. Having said that, we could get a plea, right? Something could happen, certainly between the government and Sam Bankman-Fried.
Certainly. From now until October, everything can change. Remember, the government right now has 2 cooperating witnesses. 2 of his deputies had pled guilty. What about the rest of them? I mean, there are definitely other people that were very close to Sam Bankman-Fried's inner circle. What happens to them? Do they come forward in a bigger way? What kind of evidence does the prosecution provide? There are a lot of questions here. And remember, we are watching the Southern District case play out, but we're also watching the SEC and CFTC, both with different complaints, with a separate set of allegations, including those wire transfers between Alameda and FTX, Sam Bankman-Fried, as well as more people he's associated with and the use of the money from Alameda and FTX, which are very separate from the 8 criminal counts he's facing from the Southern District.
All right, really appreciate it. Shonali, some great reporting, busy day for you. Shonali Bostic, Wall Street reporter at Bloomberg News. And I highly recommend, she did an interview earlier with John Gray over at Blackstone about getting a big investment into their real estate fund. Check it out.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the new year. It's a lot like the old year. The Dow, the S&P, NASDAQ, all in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the red, helped by losses in Apple and Tesla. Dow's currently down 112 points. That's off session lows of 300, while the S&Ps are down 23 and NASDAQ is off by 86. The U.S. 10-year yield at 3.79%. Gold is up 15. Oil is under pressure, but Bitcoin is trading little changed. Among the main 11 S&P sectors, leaders were telecom and the financials. Energy was under pressure, and leaders to the upside, the Dow, Boeing, and Disney, while Apple fell 4.2% and led to the downside. In other news, Tesla fell as much as 15% to the lowest level since August of 2020 after deliveries missed estimates. And wrapping things up, Blackstone's BREIT to get a $4 billion infusion from the University of California. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been talking about this. Shares of Tesla plunging today as much as, I think, 14% after the company delivered fewer vehicles than expected last quarter. This despite offering hefty incentives in its biggest markets. Analysts wanted to see a bigger number, Tim,
yeah,
right?
420. It's not easy to forget when you're talking to Elon Musk here. I was like looking at that. I was like, come on.
Come on.
Right?
Yeah, be creative. Tesla shares are down roughly 74% from a high back in November 2021. So with more in our weekly Bloomberg Plugged In segment, where we check in on the EV space, is the co-host of Bloomberg Technology, Ed Ludlow. Tim Ed joining us from our Bloomberg 960 studio in San Francisco.
So Ed, third quarter in a row where the company has missed when it comes to these deliveries. Tesla shares just getting punished today, down as much as 14%, as Carol mentioned earlier in the day, though off of those lows. How should we read into these figures in the last, few days of the quarter push for deliveries?
Yeah, I mean, a lot of the street are jumping on the idea that this is kind of the final piece of evidence needed to say there's a demand problem for Tesla. The third consecutive quarter where deliveries have come in below estimates. On the other hand, they came in at 405,278. That was below consensus of around 421,000 or 420,760. And it was above the kind of most bearish forecasts. But you have to look at the actions, and you guys spoke about them, that they took in the quarter, cutting prices in China, boosting the incentive in the US to $7,500 for Model 3 and Model Y. All of that taken together, the street seems to be saying, yeah, there's a real demand problem here for Tesla.
But still a good number, no?
Record, record, yeah.
I mean, I don't know whether, is it just a case of we need to kind of do a little bit of a reset when it comes to Tesla in terms of some of the numbers, maybe because it's becoming a more crowded field, or maybe how do you think about it? Someone who's covered this company for a while now, how should we, and you understand kind of what the analyst community is saying, how do we need to think about Tesla, it's becoming, more of a grown-up company?
In some ways.
In some ways, okay.
In some ways. I mean, Tesla is targeted 50% average annual growth. In other words, every year they wanted to try and make their delivery numbers 50% greater than the year before. They did not manage that in 2022. They came in at about 40% average annual growth. But if you kind of go over a number of years, they are on track for that. It's just that when you make that argument, there are some worrying signs as well. So Tesla would say, well, think about what we did in 2022. We brought new plants online in Berlin, Germany, and in Austin, Texas. But, on the other hand, people would say, well, are you ever going to be able to reach that 50% average annual growth going forward if you're telling us you're bringing more plants online, more areas where you're building vehicles, and you're not able to actually hit that number? The other thing that Tesla said is they repeated this idea that because they're smoothing out where the cars come from, so traditionally most of them have come from China or from California, now they're more evenly spread. That meant more vehicles were moving around the world and weren't counted in time. There's only so much patience the street has for that. But at the end of the day, Tesla makes cars. They happen to be high-tech EVs, but they're still making cars, and they're not immune to what we're seeing in the global economy, which is slowing down as well.
You know who else makes high-tech EVs? Ford.
Who's that?
Volkswagen, BMW.
Yeah.
General Motors. They don't do it the same way Tesla does. They don't sell them on the same scale as Tesla. But if we're thinking about the future, Ed, there's no question there's a transition happening when it comes to autos. It's just Tesla's not the only game in town anymore.
Tesla's not the only game in town anymore. And, you know, when we talk about this issue of demand, there's not one single contributing factor, right? So Elon Musk has tweeted a lot about the impact of inflation and the slowdown in the economy globally. He's talked about the impact of higher rates and the Fed. That is one thing that dampens demand. The other thing that dampens demand for Tesla is choice and competition, right? For a long time, the only pure play battery electric EV you could invest in or buy was a Tesla. That's just not true anymore. You know, and there is evidence that market share is becoming more even, and indeed many of the sell-side analysts who have cut price targets this morning, and there are many of them, have said, you know, now one of the things that Tesla needs to be more savvy about is competition, and we could see them, if the sell side is to be believed, move away from this idea that they don't need to advertise or market like they do traditionally. They need to be sort of more of a mainstream player if they want to drum up that demand, and that includes incentives.
Ed, did you see the story on the Bloomberg by Tom Randall? And it talked about if you want to predict how much Tesla's cheapest car will cost at any given time, you just have to know one thing. The average price paid for a new vehicle in the U.S., only $300 or so separates the two figures on average. So we're talking about the average U.S. vehicle price versus Tesla. I mean, there is something, I always think about that. For how long would have conversations around the cost of a Tesla vehicle, but I feel like this is an important factor.
It is. I don't have my Bloomberg up in front of me, but the average cost of a new vehicle in the US is around $47,500, right? $47,600. The average cost of a Tesla Model 3 is $300 less than that. So it's very close. But the thing is, the story about Tesla, the departure from what Tesla's kind of submission statement was. Remember, there was a time where Elon Musk was talking about a $25,000 base price EV, and that's kind of been abandoned. There was a time where the focus was really on a $35,000 EV, and we're nowhere even near that now. You know, that for a long time, Tesla's been in a position where the demand for its vehicles far outweighed its ability to supply them. What we expect in 2023 is an inversion of that, where they'll build more vehicles than, frankly, there's demand for. And so what the street is saying, how is Tesla going to react to that? Are they brave enough to use levers like cutting prices, adding more incentives, doing traditional marketing to kind of get that demand side of things going again? And actually, lots of the street are pretty sanguine about it, right? Morgan Stanley, who made that inversion call, saying, yeah, actually, if there's any one name that can weather this storm, it is Tesla, because it's the market incumbent, but also it's proved that it can be more nimble than others with all those levers at its disposal.
Yeah, but there's a lot in the product pipeline that has yet to hit the streets, Ed. And I bring this up because I talked to a friend over the weekend who was an early adopter, had a Model 3, got rid of the Model 3, got a Rivian truck for himself.
Really?
Yeah. Loves this thing, absolutely loves it. Bought a Model Y for his wife, so his wife drives the Model Y. She loves it, but he's not driving a Cybertruck. And he's not going to buy another Tesla, I bet, you know, because he loves this Rivian so much anytime in the next few years.
Yeah.
There's no Cybertruck out there yet. There's no Tesla Semi that's actually on the streets right now.
Yeah, I mean, this is a very basic argument, but if you forget about battery electric or electric at all, and you just look at the size of what North American consumers buy today, 75% of those purchases are in the light truck category. And lots of critics of Tesla would say, hold on a minute, the Model Y is not really an SUV, is it? It's just a sort of chubby sedan. But the frank reality is that 95% of the vehicles Tesla sells are the Model 3 and Model Y. So the introduction of a Cybertruck, will that change things? The pickup is beloved in America, but with the pickup comes the brand loyalty story. You know, the F-150 is beloved by America. Brand loyalty is big in that category. Does it change anything? We'll have to see. It goes back to what we've had in this conversation. It's all about price at a time where you can't get away from the global consumer being under duress, partly because of inflation, but also other factors that are slowing down the economy.
Ed, what we really want to know is when you get into your Tesla and you pop on the autopilot, do you take a nap and do you just wait to see what happens?
Oh, my goodness. So for our audience that want to know about this story, the New York Post reporting it, but there is a police statement out there. We're talking about Germany and Bamberg. And long story short, for about 15 kilometers, police were chasing a Tesla. They were in hot pursuit. The Tesla, according to the police report, was in autopilot mode. The driver was asleep and completely unaware of the sirens blaring behind him. When the police eventually caught up to the driver, he was in trouble. You know, his license has been suspended. They did find, I should say, evidence of drug use, but he had tricked the system by weighting the steering wheel. Because even when in autopilot mode, you're supposed to have your hands on the wheel. It's a brilliant story. The New York Post reported it. Go and read it.
Ed, is there any better advertising for the capability of what it can do without a driver than a story like this? You know, drugs, of course, notwithstanding.
This is a really hard one because all you have to do is go on the full self-driving or autopilot sections of Tesla's website, and the caveats are very clearly stated that the expectation under the current laws of the jurisdictions that Tesla operates in is that the driver must be aware and have their hands on the wheel. You know, this has been one of the real concerns for regulators, for lawmakers, for consumer advocacy groups, is gaming the system or cheating the system so that you are allowed to take so you are able to take your hands off the wheel. There's a lot of concern about what the consequences of that would be. So while Tesla is transparent in its small print about what the rules are around self-driving and autopilot, the marketing and the language they use around it in public, on Twitter, for example, is a little different.
All right, Ed Ludlow, co-host of Bloomberg Technology. Check him out at 5 p.m. Wall Street time on Bloomberg Television, joining us from our 962 studio in San Francisco. So when
when we were
a colleague took his hands off the wheel and we did the self-driving autopilot for a few minutes.
That's why they made us put the hands back on the wheel.
That was okay, though, for those few minutes, obviously.
But then we got the notification that we couldn't do it anymore.
Put your hands back on the wheel. All right, always with her hands on the wheel when it comes to world and national news. Our Nancy Lyons, she's in D.C. Hey, Nance.
Thanks, Carol. The voting for Speaker of the House will continue until a candidate receives a majority. California Republican Kevin McCarthy has lost a second round of voting, failing to garner the 218 votes needed to take over the job. After losing the first round, McCarthy's colleagues stood on the floor to back him, including Ohio Congressman Jim Jordan.
We owe it to them, the American people, the good people of this great country, to step forward, to come together, get a speaker elected.
Congressman Jim Jordan. Buffalo Bills safety Damar Hamlin remains in critical condition after collapsing at last night's Bills-Bengals game. He was administered CPR, defibrillated, and transported to a Cincinnati hospital. A family spokesman, Jordan Rooney, told ABC's Good Morning America they are optimistic.
Family's in good spirits. We're honestly just taking it minute by minute, hour by hour.
Rooney would not give any specifics about Hamlin's medical condition. The NFL says the game will not resume this week. FTX co-founder Sam Bankman-Fried has pleaded not guilty to 8 criminal charges. That sets up one of the highest-profile white-collar fraud trials in years.
The crypto exchange co-founder is facing federal counts ranging from wire and securities fraud to campaign finance violations. And while Bankman-Fried's not guilty pleas don't come as a surprise, legal experts say they'll give the 30-year-old more time to assess the evidence prosecutors have against him and to decide whether to fight or to negotiate a plea deal. Today's plea sets up a lengthy trial that could span several weeks and probably won't start for at least a year. In Washington, I'm Nathan Hager, Bloomberg Radio.
Also in court today, Frank James, the New York City native who was accused of tossing smoke canisters inside a packed Brooklyn subway car before opening fire on stunned commuters. He pleaded guilty. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's World Headquarters, I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell. First trading day of the new year. It is a down day on Wall Street. The Dow, the S&P, and NASDAQ all in the red. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to apply for a payroll tax refund if your small or medium-sized business was impacted by COVID-19. Innovation Refunds clients already claimed over $2 billion in payroll tax refunds. Get started at getrefunds.com. Start of a new trading year. Same old issues for investors from last year. Katrina Dudley is portfolio manager at Franklin Mutual Advisors.
Look, I think that the risks that we've got in 2023 are similar to some of the risks that we've seen in 2022. Inflation is the big one, and Fed is the other one in terms of, the pace at which they've increased rates over 2022 has been very significant, and we need them to kind of step off that gas pedal and let the economy catch up.
Yeah, S&P right now down 16, again off session lows, but still down 0.4%. The Dow down 52, down by 0.2%. NASDAQ down 75, a drop there of 0.7%. 10-year yield 3.79%. The 2-year 4.40%. Gold is at $18.37 the ounce, up $13 now, up by 0.7%. While West Texas Intermediate crude is down 3.9%, $77.12 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in today's trading session. We see stocks, they're off their lows of the session, but it's a down day on this first U.S. trading day of 2023, and we've got a familiar name for you all.
Yeah, very pleased to have back with us David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. They've got about $9.3 billion in assets under management. He joins us once again on the phone from Summit, New Jersey. David, Happy New Year. How are you?
Same to you and Carol. Thank you.
Yeah, well, thanks for joining us once again. We do appreciate it. David, the year not starting off necessarily on the right foot, starting off on the red foot with S&P down 0.5 percentage point. After last year, I mean, how do you portend the early part of 2023 goes?
Yeah, well, Tim, it is a new calendar year, but it's the same old problems continue to plague us here. I think recession concerns are probably at the top, particularly for equity investors, because that could hurt corporate earnings, and that's the lifeblood for stocks. Then there's a concern over inflation. Inflation appears to be waning, but we just don't have enough data yet to be sure about that. And of course, then what's going to be the Federal Reserve's reaction to all this? Will it be able to pivot quickly enough when inflation starts to wane that it will keep the economy from going into some sort of recession, or it will be so concerned that it might come back out of that inflation bottle that it will keep pushing rates up too high, which will make any economic cooling even worse.
All right. Do you really care about the macro fundamentals, David Dietz, or do you care about thinking about some of the fundamentals for particular stocks at this point? Because you shared with us a couple of names that I'd love to talk about, including Meta. But is that what it's about? Like, pick your stocks here in 2023?
Well, you know what I'm going to say here. It's really both. I mean, if there's one really cool takeaway from last year was that strategists were as wrong as they've been since 2008, predicting the S&P to be over 5,100. It turned out to be under 4,000, yet their earnings per share forecast for 2023 2022 was just about on the money. So they got what their earnings were going to be, but completely missed the valuations, which of course is driven by inflation, the Federal Reserve, and higher interest rates. So I think both are important. So, but those things are a little bit out of our control. What we'd like to do is drill down into stocks that we think have less downside risk if the macro turns out to be a little worse than we're hoping for, versus their upside if they can get their own acts together and we skirt a really deep recession.
Okay, well, speaking of getting its act together, some people have said that Mark Zuckerberg doesn't seem to be getting his act together at Meta Platforms and is blowing, over $10 billion a year on the metaverse. But you say there's an opportunity when it comes to the company formerly known as Facebook.
Absolutely. So I would argue first that a lot of the risk has been squeezed out of it. Remember, this is a company that dropped about 60% last year. I think the market cap dropped about $800 billion. So whenever you can buy something, more than half off, that is helpful. Certainly in traditional metrics, we're talking about, 12% free cash flow yield. That looks extremely attractive. And I would argue that Zuckerberg is getting the message. I mean, recently they've agreed to lay off about 13% of their workforce. They've cut back a little bit on the metaverse. The fact of the matter is those employees there, they're so dependent on that stock-based compensation. If that stock doesn't go up, he's going to be by himself. So I think he will get the message if things don't turn around.
David, have you played with the Meta Quest Pro at all, the Oculus headset?
Way too old for that.
But, come on. What are you talking about?
I do keep tabs on my kids who are very much in trend with all these things. They have not got into the metaverse. Having said that, by all accounts, down the road, there will be something to it. Remember, a decade ago, we thought a lot of things that we do now, like, even reading on screens would not happen, and here it is.
Well, I spent a little time over the weekend, Carol, playing, doing some boxing in the metaverse.
Did you really?
Yeah, on the Oculus.
Did you like it?
My arms are sore. It was pretty cool. It was actually a good workout.
Was it fun?
It was fun. I was with a friend. Then I did a little putt-putt golf as well.
Are you going to buy?
Which was pretty cool. Well, it was funny. I said to my friend, "How much is this? Like $400 or $500? It's pretty cool." He's like, 3 times that, $1,500. And I was like, "Yeah, okay, I'm not buying that."
All right, price has to come down a little bit. By the way, Meta is up almost 8% in the past 3 trading days, and as you said, David, down about 64% last year. But investors have definitely been moving into it. Let's get to emerging markets, and I do feel like if you look at almost everything Wall Street expects in 2023, it's our Bloomberg Big Take today. One of the things that comes out as our team, more than 250 pages, talking to analysts all around the world, one of the things that does pop up a lot is the possibility for emerging markets to be a good opportunity in 2023. You buy into that, David?
I do. Let's step back a moment and look at just developed international markets. One story that has not been covered well is that by virtue of the final month's performance of last year, December, the International Developed Country Index funds outperform the S&P 500. We haven't seen that for 8 years. And so I think there's a lot more value overseas, and people are just starting to recognize it. Of course, emerging markets, the value is unbelievable. You got about 3.6% dividend yield, about double the S&P 500. It's down 23% from its 52-week high. And, we're complaining here about we're having trouble with growth. Our population isn't growing as fast. Those are the areas of the world where it is growing. And it does seem like China can only go up from here as they end the lockdowns, and they'll eventually get herd immunity if they're not smart enough to get the right vaccinations into their people. And so I think the second largest economy on the planet could drive emerging markets. And so we're suggesting Vanguard Emerging Markets ETF, VWO, gives you a nice diversified exposure. That could be just what the doctor ordered here.
Hey, David, we've just got about 45 seconds, 50 seconds. Lithium Motors, LAD is the ticker. Not a name we talk about a lot. Tell us why you like it.
So the auto industry is in huge turmoil, but I've been at this game for long enough to know that you buy into industries that are under pressure. Why? Higher financing rates, concerns about recession going forward. And so I'm looking at some of the best players. Lithium Motors is a major auto dealership, has a rural strategy, which I like, less competition. They'll sell you any brand you want. Do you want an EV? Do you want conventional, foreign, domestic, whatever? Yeah. They have a nice roll-up strategy. Is trading at just 5 times earnings, Carol, which in a still relatively pricey market looks good to me.
Yeah, based in Oregon, you're right. It isn't a name we talk about. It's about a $5.5 billion market cap. About 9% of the float is shorted. Lithium Motors, ticker LAD, something that David Dietz likes. David, thank you so much. David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management, joining us on the phone from Summit, New Jersey. This is Bloomberg.
is 3:53 on Wall Street. I'm Charlie Pellet with today's company headlines. Apple has fallen out of the $2 trillion value club. Today, a steady slide in Apple shares pushed the iPhone maker's market value below $2 trillion, the latest casualty in the tech stock rout. Apple shares are now trading lower by 3.7%, Apple at $125.17. Apple moved lower as concerns about iPhone supply in the important holiday quarter mount, and investors lose faith in a reprieve from higher interest rates. Tesla, perhaps the big tech story today, it delivered fewer vehicles than expected last quarter, despite offering hefty incentives in its biggest markets, reinforcing demand concerns that contributed to the worst month and year for the electric car maker's stock since its 2010 initial public offering. Tesla shares now lower by 12.3%. American auto sales likely rose in December and will rebound in the new year as a recovery recovery in vehicle production will more than offset the effects of inflation and rising interest rates. Analysts at Barclays say Rolex has been raising prices in the U.S. and the U.K. by an average of about 2.5%, the latest increases for the top Swiss watch brand. Again, it turned out to be a down day on Wall Street. We've got 6 minutes to go ahead of the closing bell. Stocks are lower with the S&P down 13, lower now by about 0.4%. The Dow, little changed right now, down 3. Got to keep it locked in right through the close. Nasdaq down by 0.7%. Those are our top company stories. I'm Charlie Pellet.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, less than 5 minutes left to go in the first trading session here in the United States of 2023. And as we mentioned, stocks are down, yields, I'm just looking at a 10-year with a yield of 378, 2-year note with a yield of 439. We get some Fed minutes tomorrow, and then, of course, we look ahead to that jobs report on Friday. So there's a lot to keep us certainly busy. Having said that, a couple of stories that are definitely on our mind today.
Yeah, I'm going to start with the story on the Bloomberg terminal, all about what Michael Burry's latest warning is. You know him from The Big Short fame. He was portrayed by Christian Bale in the 2015 movie. He said on Twitter late yesterday, quote, "The Fed will cut and government will stimulate, and we will have another inflation spike."
Yeah, that is interesting and worrisome, especially as we know that the U.S. Is certainly trying to get inflation under control. We've talked a lot about maybe the potential for peaking if you look at some of the data points. But as you said, the U.S. is in recession by any definition. This is what Burry said. Fed will cut and government will stimulate, and then we'll have another inflation spike. Like, I think about that, and it's just, I don't know.
Okay, so
that would make this a difficult year.
It would. And look, we have to put this in the context of what he's tweeted in the past, right? He said back in September, more pain for the stock market, saying we have not hit bottom yet.
Mm-hmm.
In the second quarter last year, his firm dumped all of its equity exposure except for one
So he kind of got it right?
I don't know.
Well,
I gotta wait to see. He cut the hedge fund back in August, exited positions, including Alphabet and Facebook parent Meta, while adding private prison operator Geo Group. It was Scion's only long stock holding as of June 30th, according to a regulatory filing back in August.
Yeah.
That's interesting.
I don't know. I mean, this is the tricky part of, like, you know, people talking, our own Vince Signorello saying it's time for the Fed, right? Enough is enough. Others saying, and I think even Jay Powell has said that they would rather overdo it, right, with higher rates to bring down inflation and have it stick rather than cutting out too early and maybe have inflation come roaring back.
I want to talk about this other story on the Bloomberg terminal, Carol.
Shopify?
Yeah, Shopify, the company's CEO, telling employees to just say no to useless meetings. Matt Boyle writing about this in the Bloomberg.
Yeah, the e-commerce firm canceling all recurring meetings with more than 2 people and encouraging staffers to decline invitations and detach from big internal chat groups.
Here.
I was just going to say that. I mean, those recurring meetings, I don't know, sometimes I've seen here where you have to stand in a meeting to make it move along more quickly. Stick around, folks. We're talking about the market close. This is Bloomberg.
To the closing bell, and we're going to take you there and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Damian Sassauer. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast, our first of the year, with Carol Massar and Tim Stenevec. We welcome our audiences across Bloomberg Television, Bloomberg Radio, Quick Take, as well as on YouTube to parse the most crucial moments of the day. And hey, I mean, I spent a whole week locked in a room with Tim and Carol last week and actually lived to tell the tale here. Actually, it was a wonderful time here. Actually, wasn't a lot going on last week. A lot going on today, though.
I was wondering why you look so amazing. It must have been all the time with us, Romaine. Having said that, you know, we've got some names gaining today. So it's not like investors are running for the exits on everything. And we did see some buying, I want to say about an hour ago. We finished off our lows. Does that mean some optimism? I don't know. I'm going to wait till we get through those Fed meetings and the jobs report on Friday.
You know, people make a big deal about getting a new planner, turning over the last page of the calendar, getting that new page a day, Damian. But at the same time, as David Dietz from PPAC Private Wealth just reminded us, it's a new calendar year, but the same problems plague us. You know, the concerns over inflation, inflation. We don't yet know what's going to happen when it comes to a recession. So even though it's a new year, the same problems are ahead.
Yeah, and if you just look at some of the price action today, you look at consumer durables, you look at names like Ralph Lauren, Whirlpool, D.R. Horton, Nike, all pretty big gainers on the day. And so look, again, this for me shifts back to the consumer, which sectors in the equity market are going to outperform in the first half of the year.
Yeah, and we should point out too, in terms of investor sentiment, stocks actually across the board open higher on the day here. Of course, that rally only lasted less than about 30 minutes before they dipped into the red. We're well off the lows of the day. That's the good news here, but nevertheless, it is going to be a close in the red for most of the major indices. The S&P 500 down about 15 points right now as we wait for these numbers to settle. No matter how it shakes out, that's going to be good for a loss of roughly about 0.4%. The NASDAQ Composite down about 7 to 0.8%, roughly about 80 points. The Dow Jones Industrial Average, I kind of saved this for last because it's still been ticking back and forth here, right on the threshold of going into positive territory. It doesn't look like it's going to make it. Down about 13 points on the day, less than a percentage point drop here on the day. We should point out Dow Transport's poking into the green right now at the close, up about 5 points. And the Russell 2000, that's lower here on the day, down about 0.6%, or about 10.5 points, Carol.
Yeah, back to the S&P 500 I go, Romaine, because kind of an even split. As I said, there were names that gained, there were names that lost ground today. 263 in the S&P 500 higher in today's session, 236 lower. But I did this for you, Damien, because MSCI Emerging Markets Index up about 0.5% today. A lot of folks are saying watch emerging markets this year.
In the face of a stronger dollar, go figure. Well, look, what's interesting also, and we haven't even talked about it, is the big loser so far year to date is Brazil, and it's Petrobras, who is a huge constituent within that index, Carol. So, let's see how they perform. With Lula back in power and the populist pivot, I don't know if those gains can hold.
All right, so let's get to some of the gainers. It wasn't so easy, I got to tell you, but let me get to it. Meta. It may have been tough for Apple today, but it wasn't for Meta. This one is up about 7% or so in the past 3 trading days, adding another 3.7% to the trade today. Mind you, that was good enough to put it top in the S&P 500 and NASDAQ 100. The Texas Loomis Sales Growth Fund boosting its holdings in November, so there was a story crossing the Bloomberg today on that, and they added some shares there. But other than that, no real news to move the name. PayPal Holdings also top of the NASDAQ 100 and the S&P 500. This one was good for a gain of 4.7% in the trade today, up as Truist Securities upgraded the name to buy, citing the payment platform's net cash position of about $6 billion, among reasons to take a more positive stance. Yeah, that'll do it. And then I do want to point out IDCC, InterDigital. This one was up almost 14% in today's trade. It's about a $1.6 billion market cap wireless communications equipment company. It lost 31% last year. But the company, and I feel like this could be a big theme here in 2023, the company boosting its share buyback authorization by roughly $333 million to a total of $400 million. So this was certainly a big standout in today's trade.
And I just want to add there, too, bank stocks actually did pretty well today. JP Morgan was up for a 6th straight day. Bank of America, Citigroup, at least the big banks, got a bit of a rally on today.
Yeah, we talked to Connor Sen from Bloomberg Opinion a little earlier, and we asked him his one theme for 2023. He said, keep an eye on the banks. Oh, I want to talk about some of the decliners today. Leading the S&P 500 lower today, we got Apple, shares falling by 3.7%, closing at its lowest level since June of 2021. Demand issues in the spotlight today. Nikkei reported earlier that Apple has told several suppliers to make fewer components for certain products, including AirPods, Apple Watch, and MacBooks. And then a little later, Apple was also downgraded to neutral from outperform over at Exane BNP Paribas, which writes that the stock's growth outlook, quote, seems insufficient to justify a valuation premium to platform peers. Let's get on over to Tesla. Shares falling 12% at the close today. The biggest one-day drop in over 2 years. It's trading at $108.10 right now. Third consecutive quarter where deliveries came in below expectations. That's why the stock is reacting like this today. 405,000 cars were delivered, just over 405K.
A record, right?
It was another record, but it wasn't what analysts wanted to see. They wanted to see over 420,000. The question, is it a story about the global economy, or is it more of a Tesla-specific story? We dug into that a little earlier with Ed Ludlow. And then Molson Coors, ticker TAP, down 4% today. Company was cut to underweight from equal weight over at Wells Fargo. The company, Wells Fargo that is, says the current consensus doesn't properly account for the cost of goods sold per hectoliter when it comes to inflation, and they don't see sufficient offsets when it comes to volume, price, or marketing because of inflationary concerns.
Yeah, interesting too. We should take a look at what went on in the yield space today, guys, because we talk about 2022, of course, being the official end of that, what was that, almost 40-year bull market that we saw in bonds. And that's flipping, at least here for one day here, as a lot of people come back in. Maybe they're looking for safety. Maybe they're making a bet here that the Fed might actually be done, or at least be ready to be done here. Your 2-year yield moving lower by about 3 to 5 basis points here, but most of the activity was on the longer end of the curve. 10 basis points down on the 10-year, the 20-year, and the 30-year here on this day. Be interesting to see if the bond market, guys, which we know got it right so many times last year, whether the bond market is going to be the lead here for the rest of the cross-asset space in 2023.
Well, I mean, you talk about income-oriented strategies, talk about overriding strategies, talk about the CBOE buy right or the put right strategies. I mean, they were both down last year. I mean, they've only been down 2 to 3 years in the last 14. So if you're looking for income, how do you look for it? I mean, do you buy put protection? Do you write puts? Do you write calls? I think 2023 is going to be an income-oriented year. I think those overriding strategies work.
Yeah, and I do also wonder about all the economic data points, how we are going to be driven from point to point, if you will, in terms of the trade sentiment. I think about, the jobs report on Friday, the Fed minutes tomorrow. We've got reads on ISM manufacturing. We've got JOLTS job openings. We've got a lot of stuff coming at us, and how much investors will once again, as the Fed has reminded us that they are data dependent, so do investors remain kind of data dependent as well, Tim?
Yeah, certainly my focus will be on jobs later this week. 1.7 jobs available for every person right now who's looking for work. Though, Romaine, I still do wonder, when we think about this in the context of the greater economy, why the conversation has shifted, it seems like, so quickly to this idea of the Fed either being done or the Fed actually pivoting just in the last few weeks, given that we're still seeing so much strength when it comes to the labor force and concerns over, well, a wage price spiral.
I think it's a little bit of wishful thinking, and we've had a couple of folks we spoke to on Bloomberg Television today who kind of got that point across, the idea that the market is really trying to time this pivot or this pause, whatever you want to call it here, and so that's creating a lot of the volatility, and that's probably not going to stop, I guess, until maybe Fed Jay Powell comes out and gives another, Jackson Hole type of mic drop. But unless we get that, then yeah, it's pretty much the market is going to price what it wants to price in, and that's what you're seeing.
Well, Romaine, what do you do if you're a risk-averse investor, right? I mean, do you have to invest in market-neutral type strategies? I'm talking merger arbitrage, equity market neutral. I mean, both of those strategies performed really well last year. Good luck trying to get the same type of performance this year. The verdict is still out, but my guess is, yeah, you probably want to take a more risk-averse, hedged approach in the first half of 2023.
And I do just want to point out, I mean, we talk about the economic data. This actually is a big week for economic data, but, we got a month before we get to the next Fed meeting, and obviously there'll be some Fed speak before that. But, I mean, this is really all the market has to hang its hat on right now. It's going to be the economic data points, which we're showing on the screen right now, including the PMI and ISM data and the payrolls report. But then keep in mind, you're going to get an earnings season that's going to kick off basically a mid-month as well. So you have a lot of catalysts that are going to sort of front-run the Fed, if you will, that are probably going to drive this market in a direction, whether it's up or down, who knows, but it's going to drive this market in a direction that's going to be a little bit independent of what the Fed does at that first big meeting at the beginning of February.
Yeah, that's exactly what I was just going to say, Romaine. Apart from the economic data that we're getting over the next week, earnings are really what we're focused on, especially because it's bank earnings. So we get a good sort of bellwether on what the American consumer is doing and those cash balances in Americans' accounts. Because if we start to hear more warnings from these big banks about spending power of our fellow Americans, then what does that mean for the economy that is powered by the consumer?
Yeah, it's going to give the Fed a lot of information, right, in terms of that next Fed meeting. What we are hearing, certainly early on, I should say, in terms of the earnings season. I want to go back to the markets if I can, because I feel the correlation that we saw between stocks and bonds last year, right? That's unusual. And I was looking at our Markets Live blog. I mean, we're on this first trading day, Damien, we're seeing some disconnect, or kind of back to the way it maybe should be. We saw stocks down, we saw bonds moving up today, and I wonder if we start to see more of that here in 2023.
Well, I think you all make a great point about banks and about financials, but for me, it's going to be about asset quality, right? It's going to be about loan losses and provisioning, and we're going to get a lot of data on that over the next few quarters, I can assure you of that. But for me, yeah, steeper curve. If we indeed see the Fed start to cut, that should be good for the banking sector writ large.
Got a lot of questions, guys. I'm just going to say it's only the first trading day of 2023. A lot to come. All right, that's a wrap for this first trading day of the new year. Our cross-platform coverage on radio, TV, on Bloomberg Quick Take, also on YouTube, Beyond the Bell. We will see you again, same time, same place tomorrow. We talked about that viral list that turned a Yale professor into an enemy of the Russian state. It is true. We're talking about Jeffrey Sonnenfeld, who has assigned grades to 1,400 companies and in the process highlighted the economic cost of sanctions. That caught the attention of Russian officials, put him on the Russian stop list, which there's a few other familiar names on that list.
Yeah, one might say he's in good company. First Lady Jill Biden is on there. Senator Mitch McConnell, they're both on the list as well. We've got Jeff Sonnenfeld with us right now, Senior Associate Dean for Leadership Studies, Lester Crown Professor of Leadership Practice at the Yale School of Management. He joins us this afternoon via Zoom from Branford, Connecticut. Good to have you with us, Professor. Good to have you back with us, I should say. Happy New Year. And, you know, I'm eager to hear your thoughts on this. Ever since the Business Week wrote this story in the magazine, I've been curious to, you know, and I know you spoke to Business Week for it, what you think now of seeing your name on that list.
Well, thank you. And it's good to be back with you, Tim and Carol. Thank you so much for the invitation, and Happy New Year to you as well. It's interesting. I've gotten a huge amount of feedback because everybody reads Bloomberg Business Week, and follows Bloomberg. So there's hardly a CEO I know that hasn't either sent a note or a call or a text message or something that sees it as a tremendous badge of honor. And that is all of them that are on the A, B, and C lists. The D's and the F's, actually, I've heard from a number that are on the D list. The D list are people that they didn't pull out of Russia, but they have curtailed some future investing. The reason we came out, by the way, with the A, B, C, D, and F isn't just because we're a schoolhouse and that's all we know how to do, is that there was some very artful public relations smokescreen, some spin that was leading to a lot of atmospherics about people who were saying nice things and not doing anything. And we thought we should divide out those who actually physically pulled out permanently, who did so temporarily, who partially pulled out, who did some atmospherics, and then some who aren't doing a darn thing. And that's how we divided them out into A through F.
You are someone that is a go-to voice when it comes to leadership and understanding what goes on in C-suites. You talk with a lot of leaders. They reach out to you as well, Jeff. But I do wonder, was there something different about the Russian invasion in Ukraine that made it easier for companies to come out and say, we got to pull out of this?
You know, very good question, Carol, because of course CEOs are under a lot of pressure these days and getting involved and using their voice in social issues. If we were having this discussion 2 years ago, there's a stampede of enthusiasm for getting involved in voting rights or the presidential succession issues. And they've gotten some blowbacks in some states on positions on whether or not it's on environmental issues or reproductive rights for women. And CEOs have still been using their voice on these various issues. However, on this one, there was no controversy, none whatsoever. In fact, I just addressed the attorneys general of all 50 states with their deputies and lieutenants there. And there was rousing support for this move, state by state. And you can actually see that doing well is not antithetical to doing good. There's no dispute between shareholders and other stakeholders. The more dramatically the companies pulled out, and our research shows this, the better they were rewarded in their financial performance.
How is this different? Help me out here, though. When I think about what happened to Jamal Khashoggi, the journalist, right, that was killed, assassinated. How is this different from the mass killings in Syria? How is it different that companies can come out and speak out against what happened in terms of this Russian war in Ukraine versus those? What's different?
Those are, a great example. I was worried after the killing of Khashoggi, Jamal Khashoggi, the Washington Post columnist, that was, I think, a U.S. resident at that point, working on citizenship,
right.
That there was condemnation and there was a slight delay, and ultimately there was a mass exodus from that Davos in the desert. But, Carol, you would say a year later, they went back. And some of our top officials still went over to some companies. There is mass suffering around the world. We can take a look at an awful lot of hotspots where there's a tremendous amount of injustice. And the question is, it's like a hospital ER right now. We have here at Yale New Haven Hospital, like around the country, we have a rising tide of respiratory viruses. We have the flu. We of course have this new strain of COVID. And we have car accidents. The weather here is horrible today, so there are a lot of car accidents. And after a while, an ER is going to say, enough, we don't want any more. No, they don't do that. They just decide on a triage basis some things are worse than other things. the mass slaughter of moms with their babies in their arms lined up for bread, that's different. Bombing orphanages, bombing hospitals, targeting civilians for this mass carnage. Those kind of level of atrocities are worse than some horrible other types of injustices. But you're right. We need to take moral positions when we can. In this case, the operational risk, the financial risk, the reputation risk of staying in Russia was so high that the companies who have stayed have suffered. And we also have very little interest in being involved there. Some bring up China, for example, and that's way more complicated because of the intertwined economics. Right now, Russia brings, the moral decision is easy because the pragmatics are so easy. Russia brings nothing to the global marketplace other than food and fuel.
So Jeff, is it then a financial decision? Is it easy financial decision when it comes to Russia, but maybe not so much when it's Saudi Arabia or China, for instance?
It's easier when we take a look at Saudi Arabia. What we did see, it's targeted. Some kicking and screaming and some enthusiastically, but every major fashion house pulled out of the Xinjiang province over that really fine cotton, of course, that's made there with the alleged detainment of these awful conditions of the forced labor of the Uyghur minority population. That's pretty horrible. And we've seen every fashion house pull out of there, and that's really fantastic cotton, and that's made a big difference. And so we see that there are targeted. People ask, what about there's an invasion of Taiwan? What about? There isn't one yet. If there is, we'll see. But right now, we've seen there is an invasion of a sovereign nation, a democratic sovereign nation, and a mass slaughter with mass atrocities. That this isn't a category by itself in the world right now. But there may be other situations that come to the fore where we need to get involved as well. But right now, this is the one. If it doesn't look like we have fortitude here, there certainly will be others. It's important to show that the world, united as they are, only 40% of these companies have pulled out. Of these 1,300 companies that pulled out are American. They're from every part of the world that pulled out, which is fantastic.
Professor, what have you heard from the companies that haven't yet pulled out yet? And I'm just going through, there are several versions of this list that you can look at on Yale's website, and then another one, YaleRussianBusinessRetreat.com as well, for a sortable version of that list if our listeners and viewers want to check that out. But some are, business as usual, still operating in Russia, still selling products to Russia. What have you heard from these companies?
Well, it's surprising. I've been tracking for 45 years now, looking at corporate social impact issues with the Business Roundtable, with the founding generation of the Business Roundtable. I'm that old. And the first movers in this case aren't the usual ones. The ones who pulled out early were big oil, big tech, and professional service firms. For various reasons, you can imagine that those three clusters are not usually on the front lines of social justice issues. They were in this case. Those who are staying are a weird mix across industries. Places like International Paper, what are they doing there?
You got Match Group here. You give them an F grade.
Match.com. What in the world are they trying to bring social harmony in to the Soviet Union and to Russia right now? I mean, there's some twisted belief that some had that these global brands, if you remember Tom Friedman in the New York Times, I hope he's not your best friend, but one of his most naive columns was a column that was very widely circulated a few years ago on the golden arches rule of diplomacy, that any two countries with a McDonald's would never go to war with each other. Yeah. And this led some U.S. brands to think that this is a way of a refutation of old Soviet repression by celebrating U.S. That's crazy. But no, they shouldn't be there. Benetton shouldn't be there. Giorgio Armani is still there. It's the Tom Ford is still there.
Jeff, we got to run. And of course, that was Jeff's perspective and opinion when it comes to the New York Times columnist. This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with an update out of Washington. The House has begun a third round of voting for House Speaker Kevin McCarthy. He lacked the votes on the third tally for Speaker. Stocks lower across the board today on the first trading day of the new year. The Dow, the S&P, NASDAQ all finished in the red. S&P down 15, dropped today of 0.4%. Stocks declined as Tesla and Apple highlighted slowing demand. Tesla was down 12.2% today. Apple lower today by 3.7%. Again, the S&P down 0.4%. The Dow, little change, down 10 points, down less than 0.1%. Virtually flat on the day there. NASDAQ was down 79, a decline of 0.8%. 10-year yield 3.76%, with the 2-year yielding 4.38%. Spot gold up 0.8%, 18.38 the ounce. West Texas Intermediate crude down 3.8%, 77.16 a barrel. Again, recapping, stocks lower, S&P fell 15, down 0.4. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much for that update. We continue to monitor that House vote for U.S. House Speaker Kevin McCarthy are hoping to become the Speaker of the House.
He hopes so.
Yeah, third round of voting going underway, so we'll continue to monitor that out of the nation's capital. One thing we talk about a lot, Tim, is taking the bias out of investment decision making. Why is it so important? There's tons and tons of research that's out there that shows diversification in thought, culture, employees, boards makes for better investments and financial returns. So that's our backdrop.
Yeah, with that in mind, with us today is a firm that applies what's called cutting-edge research to reduce racial and gender bias, to identify, evaluate, and invest in entrepreneurs who have been overlooked and underestimated. Those are the words of the team over at Illumin Capital. And we've got Darren Dotson back with us right now, managing partner at Illumin Capital. He joins us this afternoon once again via Zoom from Oakland, California. Darren, great to have you back with us. How are you? Happy New Year.
I'm doing great. Happy New Year. I'm doing really well.
Thank you. Hey, I want to start with just the technology that you use, the research that you use to understand bias when it comes to investment, and what you found using your methodology.
Sure. Well, at Illumin Capital, we're a private equity, venture capital, and venture fund of funds. So one of the things that we're able to do is partner with a number of the leading funds in the impact investing field and work with them through the process and curriculum that we've developed to reduce implicit bias. And we look at 4 major areas within the firm in order to achieve that, and we have curriculum that maps to those different areas. One is in the bias reduction related to the boards that they own and control and how they select new board members. The second is in the investment process itself, how they select the investments of their underlying portfolios. And then finally, we look at the hiring, promotion, retention, and attraction of talent processes that each of those funds undergoes. So that's one of the powerful aspects of the curriculum that we work with the managers around. All of this is concretized within a legally binding side letter that we work with each of the managers around. Much of our industry is really trying to figure out ways to further diversity and inclusion, as you mentioned at the top of the show, but many of them don't have a process or a partner to achieve that. So that's where Illumin Capital comes in as partners alongside of those we invest into.
And, whenever we talk about impact, I always think it's important to point out that it's different from ESG, right?
Yes. Impact investing, you could think of as a sort of a focused strategy to systematically improve the world through investments. So whereas ESG can be negatively screened, going out to find tobacco and firearms and other things that might cause damage to humanity or the human condition, impact investing is really taking that a step further to go out and find ways to transformatively impact and improve the world. So we look at health innovation as one of those areas within technology. We look at education technology. We look into industries like financial inclusion or fintech, and ways in which each of these different areas and transformative environmental technologies could improve the world. The irony is that when we look at those that seek to create positive impact in the world, and indeed across all portfolios within the investing ecosystem, one of the things that should keep us awake as investors is that the biases through the research that we conducted with Stanford University towards Black fund managers and likely other people of color and women within the financial markets prevent us from seeing optimal returns. So I think that whether you're an impact investor or whether you're an investor in the formal financial markets, we should look carefully at this unique study that we did, secretly testing 180 asset allocators to show and demonstrate that the reason why we have only 1.3% of $69 trillion in capital managed by women and people of color isn't just because of the availability of opportunities to invest in them. It's because our biases keep us from seeing the returns on the other side of those that are pitching us. So we all have biases. And like Daniel Kahneman would say, who's won the Nobel Prize in this area, we care about biases that happen on a 1 to 2 person connection, but systematic bias, what we found in our research, is really important to hone in on.
Darren, you know what always blows my mind is that I think the thinking was always, hey, if you can make money, the money will come. And so I'm wondering if the research is out there and you're saying the financial performance is out there, that the ability to do good and also, you know, post returns should have everybody running towards it. Why isn't it?
Well, it's a great question. And the shocking thing that even those of us who study, including one of the leading PhDs in the world in sovereign wealth fund, pension fund portfolio construction theory, and Dr. Jennifer Eberhardt, who has a PhD from Harvard and is a professor at Stanford that we ran this research alongside of, we were all blown away by the finding that the higher Black fund managers perform, the more bias they face. The less able those who had spent their entire lives trying to select the best assets in the world would be when you present them with simply a different racial character at the head of a fund, meaning a Black manager versus a white manager. So we did this test and we were shocked. The higher they perform, you know, the less capital of those that were evaluating were interested in allocating, which is against every fundamental rule in investing. So I think those of us that are passionate about making money and those that are passionate about making impact in the world can find a unique intersection and within that little Venn diagram circle where we can, push the world forward in a really important way.
Darren, I wanted to ask you, you're one of 4 members of the board of directors for Ben & Jerry's. And I'm curious how your work informs what you do at Ben & Jerry's and how that works vice versa. Because if there is one company that is actually part of a publicly traded company, Unilever, right, that is sort of putting its money where its mouth is, it is Ben & Jerry's.
Well, I'm very proud to serve on the board of Ben & Jerry's, and we are a majority women of color board, and I think that says a lot about what we think about the potential of creating impact in the world and making a difference in society.
You know, the other thing I'm thinking about, especially we've done stories about venture capital, Darren, and how, and mind you, this is a year and a half, 2 years ago, but nonetheless, I can't imagine it's changed that much, but how female venture capitalists weren't more inclined to invest in female entrepreneurs. And I do wonder, as we get more of a diversified financial community, will we see potentially that also happen? In other words, whether it's Black and brown, investment managers, are they more inclined, less inclined, to be open to entrepreneurs of a similar race? Or less inclined?
It's a really powerful question. I think there is a lot of general research that would suggest that investing in Black-led firms would result in investments within other downstream black-led companies, suppliers, and other things. But what we learn about bias is all of us are socialized in ways that we can adopt the biases of the broader society that we grew up in. We know that black teachers over-discipline, expel, and suspend black children in the school system at similar rates as white teachers. And that's for the exact same infraction. So it's by like 2x or 3x the rate of their white counterparts. So we all have to be looking at our biases, whether we're black or white or Asian or Latinx. And one of the reasons why we train at Lumen Capital on a weekly and monthly basis is so that we don't, become victim to the same things that we're trying to change within the system. And we set the example of the necessary work to do to be prepared to meet the opportunity of reducing bias, which can create higher returns and can also create more impact in the world with continuous work and effort. So when Daniel Kahneman won the Nobel Prize in this area, you talked about whether or not it was possible to reduce bias. And one of the things that he talked about is effortful activity was one of the conditions that we need to employ in order to reduce bias. And then over 1,000 company study with McKinsey and Company, he found that reducing bias could increase returns.
Darren, gonna have to leave it there. Really appreciate you taking the time. Darren Dodson over at Lumen Capital back with us. Let's get to world and national news. Nancy Lyons is in Washington, D.C. Hey, Nance.
Thanks, Tim. It has been an explosive start to the new Congress, with Kevin McCarthy failing to receive enough support to take over as Speaker. He's poised now to lose a third round of voting, but lawmakers will continue until someone receives a majority. Congressman Steve Scalise is urging unity.
I hope when we get through today that all of the members on both sides of the aisle will join together with us to solve the problems, to address inflation that is crushing middle-class families, to get control over spending.
Congressman Steve Scalise, no House business can take place until a Speaker is selected. President Biden plans to kick off the new year touting his accomplishments of the last two. He'll be in Kentucky tomorrow at an economic event with, among others, Senate Minority Leader Mitch McConnell. Bloomberg's Joe Matthew reports the second half of the president's term will present some challenges.
If President Biden spent the next 2 years actually focused on implementing and funding everything he got passed, beginning with the infrastructure bill, now law, it would likely be a full-time job.
Bloomberg's Joe Matthew reports the Biden administration is often butting heads with state and local officials on how to spend the money, and he'll need to sell his agenda to voters ahead of a possible re-election campaign. FTX founder Sam Bankman-Fried pleaded not guilty to criminal charges today, now set to face trial in October. It's expected to be one of the highest profile white-collar fraud trials in recent years. And the NFL says the game between the Buffalo Bills and the Cincinnati Bengals will not be played this week. Bills safety Damar Hamlin suffered cardiac arrest during Monday Night Football, causing the game to be suspended. The Bills say Hamlin remains in the ICU in critical condition. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. First trading day of the new year, and it was a down day with the Dow, the S&P, NASDAQ all declining. Tesla and Apple highlighted slowing demand. David Dietz is senior portfolio strategist at PPAC Private Wealth Management. He was our guest right here on Bloomberg Business Week, and he puts it like this.
It is a new calendar year, but it's the same old problems continue to plague us here. I think recession concerns are probably at the top, particularly for equity investors, because that could hurt corporate earnings, and that's the lifeblood for stocks.
Today we had Tesla down 12.2%. Apple was down 3.7%. The NASDAQ 100 index ended lower by 0.7%. NASDAQ Composite Index down 79 points today, dropped there of 0.8%. S&P fell 15, down 0.4, while the Dow dropped 10 points, down less than 0.1%. 10-year yield 3.75%, with the 2-year 4.38% on the 2-year. Spot gold 18.39 the ounce, and West Texas Intermediate crude dropped 3.9% to $77.15 a barrel. Cannot ignore natural gas today. Nat gas plunged 10.5% to about $4 per million BTUs. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie. Charlie, you better be listening to this, because this is a story just for you. It's a new year, and while there will be plenty of things to freak us out, there will also be plenty of super cool places to travel in 2023.
What? Where are we going to go? Where should we start?
Yeah.
Should we start in Maine? Perhaps end in New Zealand? Well, we've got a list of the 21 best places. With that, joining us is Chris Rausser, editor of Pursuits at Bloomberg Business Week, here in our Bloomberg Interactive Brokers studio. Yes, yes, and yes is what I see. I already I sent this list early this morning to Katie Greifeld because she was saying, I need to get a vacation booked. And I was like, well, do I have the story for you? Chris, I can't even decide which place I want to go to the most.
Well, it depends on whether you want to relax or have an adventure.
Both.
I feel like a lot of us right now who are in New York City, which is freezing and pouring rain, might want to go to St. Lucia.
Yes.
Where they have a lot of new resorts, and every picture that we looked at when we were choosing between pictures for the issue was even better than the last. We were like, this is perfect. No, this is perfect. But there's a lot of golf there. There's a lot of new resorts, a lot of wellness and massages. You can get massages in tree houses. Which, why wouldn't you? And Sugar Beach, which is a Viceroy resort, just had a whole renovation, and that's the picture that we have in the issue.
Sugar Beach?
Sugar Beach, white sand beaches, beautiful mountains all around. What could be better?
Can I just go back for a second? How do you guys, I know I ask you, how do you figure out, what is it that to put on this list?
So, a lot of magazines and publications, newspapers do these lists.
Yeah.
And our sort of lens for it is when is there news related to the place?
Okay.
So a lot of, places pick some place you've never heard of or something really off the beaten path. We choose a place if there are new hotels and resorts, particularly of the luxury kind. If there's new air access, so new direct flights to a place.
Smart.
New travel itineraries. So one of the places we have is the Marquesas Islands, which are very, very remote in the Pacific. And you used to not even really be able to get there by traditional ship. And now you can get there by a couple of cruise ships. So that's a reason why we would do that. So, places that you can go that have a new level of sort of comfort, a little of accessibility are the reasons why we choose places.
How did you determine the best times to go?
That, we talk to travel agents in each of the destinations who help us, sort through what's going on there, and they give us each of those, they give us a range of the best times to go, best and worst times, and then we talk to Google, who gives us hotel data, so that we overlay that on a chart, so you can look and see when the prices are up, prices are down, and when's a good and bad time to go.
This is what I'm getting at here. We're Bloomberg, we harness data.
We're data, yeah.
Yeah, and this story is full of data, and it's not just, you throw a dartboard and decide, okay, we're going to include this area.
Yeah, and some places are, it's obvious not to go to somewhere tropical in monsoon season or where it's going to be very cold. But in a place like Maine, which is on the list this year, which is where I'm from, you might think it's a great time to go in June because that's summer and the prices are low. It is incredibly buggy.
So don't go.
Black fight season in Maine. And if you're a Mainer and you're used to it and you don't mind going fishing and getting bitten all the time, that's okay. But only insiders insiders would really know to tell you that. So that's what we
August
have.
is when they go to Maine.
All right, so
Yeah,
where do you
yeah.
want to go on this list?
Oh my God. Okay, so I really had never heard of Trancoso in Brazil, which is this like sort of sleepy town where this sort of fashion jet set has been going in recent years.
Yeah.
And people just go and they have little houses and cottages and they ride horses and it's just like so remote and quiet. I loved the idea of doing that this year.
What do you think is sort of the best value here? Because I'm sorry,
just get rid of
I know
him.
it's pursuits. I know it's pursuits. but
Value?
yeah, because we talked a lot, Carol, in recent weeks about how expensive hotels have become.
Yes.
When it comes to revenge travel, and you know, Carol and I were talking earlier this year. We go to places that we've been before, and it's like $300, $400, $500 a night for a hotel that used to be $200 a night just a couple years ago. There are some places that you could, you know, kind of be getting a bargain. I'm talking about Nepal.
Oh, yeah. I mean, Nepal is a place where a lot of people think of going because you want to hike Everest or you want to go to base camp or you want to, you know, sort of do some really extreme trekking. But now there are a bunch of pretty nice hotels, actually very, very nice, I shouldn't say pretty nice, like luxury hotels, all on the different routes. And people still go there to hike and sort of have adventures, but they're also, these hotels sort of take advantage of the landscape and also incorporate cultural, you know, building techniques and styles of the people that live there, and it's just a really nice way to experience the region. Another place that wasn't on my radar until we started researching for this was Macon, Georgia. Which has a ton of incredible history, like thousands of years of Native American history, and then a lot of cultural history and music, jazz, rock and roll, and just a lot of performance and great restaurants, and that is kind of, you know, for a lot of people in their backyard.
Yeah, I think that's really interesting, right? There's places that aren't actually very far from us. One of the places I want to go to is Panama City, which...
Didn't you just go there?
I went as part of a Bloomberg event, part of the NEF group, and I have to say, I've been looking at it more, and I want to kind of go back there because there's just so many different aspects of it. Tell us about Panama City.
Yeah, so, you know, maybe, you know, over the past 10 years, people who edit magazines, like me, have become more tuned into Panama City, especially for the food and the nightlife. Like, it's a very cool international jet set city, and just like a really fun place to hang out. And over the past few years, a bunch of big hotel groups have been moving in there, opening up in the historic district, in the new part of town, and then also some great resorts along Panama's coast. So not right in Panama City, but near Panama City, where you can go sleep in a treehouse, you can go sleep in an overwater bungalow like you're in the Maldives, and there's just a lot you can do, have adventure, like do adventure travel, do nothing, or party, all in one kind of small country.
I feel like, and it's not necessarily that expensive. I will say, having eaten in a restaurant there, thanks to our Bloomberg colleagues who were like knowing where to go, the food was incredible. It's like such a mixture of so many different cultures. But there's also, as you said, there's this beautiful Caribbean coast that's so unexplored. Yeah, it's on my to-do list.
Okay, Chris, there's the data that goes into this, but there's also the on-the-ground reporting.
Data.
I know.
That sets us apart.
But I do like to look at the end and see who the editors are who did this, the reporters who you tapped into in terms of their expertise. Talk a little bit about how it comes together from an editorial standpoint when you look beyond the data and you get the on-the-ground stuff.
So Nikki Eckstein, our travel editor, who you all know and love, spends the whole year updating this crazy hotels database that we have. We always update, and you can look at every new hotel opening all around the world, and she has it in there. And so she is on parental leave, but before she left, she gave us a list of all the hotel news around the world. And we have an incredible network of contributors who are either in these destinations or travel to these destinations. And I don't know if you know this, but Bloomberg has some 2,000 plus journalists all over the world, and a lot of them pitched us ideas and wanted to write for us. So, you know, the story we did about Oslo, which is an incredible city that's going through a lot of just really interesting architectural changes that the bureau there wrote for us. Ben Harvey in Istanbul wrote about Istanbul and how everyone's going there to try to get a deal, and it's so buzzy and crazy because the inflation is nuts. And so we have, you know, contributors from within the building and without, writing for us, telling us about, you know, where they were. A lot of the really far-flung places where we don't have a ton of journalists from Bloomberg on the ground, like Nepal. We have contributors like this guy, Chris Schulks, who did Nepal and Isan, Thailand, which is also really cool.
I'm putting my hand up.
Yes.
If you need me to go anywhere,
listen,
I will gladly go.
We're ready to send you.
All
21, how come not 22?
We, you know, actually, we had 22.
Chris, we got to run.
Oh, yeah.
is 4:53 on Wall Street. I'm Charlie Pellet with today's company headlines. We have the Dow, the S&P, NASDAQ all declining today. A steady slide in Apple shares pushed the iPhone maker's market value below $2 trillion, the latest casualty in the tech stock rout. Apple move lower as concerns about iPhone supply in the important holiday quarter mount, and investors lose faith in a reprieve from higher interest rates. Today, Apple shares dropped by 3.7%. Tesla shares tumbled today. Tesla delivered fewer vehicles than expected last quarter, despite offering hefty incentives in its biggest markets, reinforcing demand concerns that contributed to the worst month and year for the electric car maker's stock since its 2010 initial public offering. Several analysts cut price targets on the stock. JP Morgan Chase said Tesla might never again reach its multi-year 50% growth sales objective. Today, Tesla plunged 12.2%. U.S. auto sales likely rose in December and will rebound in the new year as a recovery in vehicle production will more than offset the effects of inflation and rising interest rates. Kentucky State Treasurer Allison Ball has published a list of 11 financial companies, including several major Wall Street banks that she deems to be hostile to the fossil fuel industry. Among those companies, BlackRock, Citigroup, and JP Morgan Chase. Again, down day on Wall Street, kicking off the new trading year. Those are some of our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Let's get to world and national news. Nancy Lyons is standing by in our 99.1 studio. Hey, Nance.
Thanks, Tim. Kevin McCarthy's chances of becoming Speaker of the House remain in doubt, with Republicans prepared to take control of the chamber. McCarthy has now lost 3 rounds of the voting. After the first round, Ohio Congressman Jim Jordan stood on the floor in defense of McCarthy.
I think Kevin McCarthy's the right guy to lead us. I really do, or I wouldn't be standing up here giving this speech.
Congressman Jim Jordan. Earlier in the day, McCarthy himself spoke about the tight race.
I will always fight to put the American people first, not a few individuals that want something for themselves.
McCarthy's loss in the first round marked the first time in a century that a speaker has required multiple rounds of voting. Sam Bankman-Fried is pleading not guilty to the 8 criminal charges filed against him concerning his management of cryptocurrency platform FTX. And Bloomberg's Sonali Basak, who is covering the trial, says during his appearance in court today, prosecutors requested Bankman-Fried not have access to FTX or Alameda funds to post bail of $250 million.
This was not really a term of the bail package earlier. Remember, there has been a lot of discussion, and then namely from the Department of Justice, investigation into what's been happening to certain funds associated with wallets tied to Sam Bankman-Fried's empire.
Bloomberg's Sonali Basak says the trial is set to begin October 2nd. Buffalo Bills safety Damar Hamlin remains in critical condition after suffering a cardiac arrest when he was hit during a game against the Cincinnati Bengals last night. The 24-year-old is being treated at the University of Cincinnati Medical Center. The incident is sparking new criticism over injury incidents in the NFL. The game was suspended last night, and the NFL said today it will not be rescheduled this week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. Your business may be eligible to receive a payroll tax refund. The application takes around 8 minutes. 8 minutes or less to see if your small to medium-sized business may be eligible for a refund of up to $26,000 per employee kept on the payroll during the pandemic. Find out at getrefunds.com.
All right, folks, you are listening and watching Bloomberg Business Week on this Tuesday. House GOP leader Kevin McCarthy falling short of winning the speakership in a second round of voting. He is on track to lose a third ballot. That voting is still ongoing. Let's get to Joe Matthew, host of Sound On Bloomberg Radio, coming up in just a few minutes right here. Joe, do they just keep voting until they find a Speaker of the House?
Well, that's a good question. And by the way, he just lost the third round. This is historic. We've not seen this go to a second ballot in 100 years. And we're now going to the fourth. to answer your question, Kevin McCarthy wants to keep everybody locked in that room as long as it takes, because as soon as this session is adjourned, they go back to their offices, they're picking up the phone, they're getting together, having pizza, whatever happens tonight, and they're coming up with other plans, right? They're thinking about other candidates. And Democrats don't mind sitting in the room, by the way, because they can just vote for Hakeem Jeffries all night, take credit for that and have fun. So this could go beyond midnight. This appears to be one of these pull out the cots nights in Washington.
What's the end game here? Why are Republicans doing this, and how does it portend for 2023 and the new session?
Well, there's a lot there. There's a faction now. It appears to be exactly 20 Republicans who just don't want any part of Kevin